That should be fun to keep an eye on. Yeah, we're seeing let's see, where is Microsoft trading at currently? It's trading at 539. So call wall for Microsoft looking like it's 550 now. So let me go ahead and pop that into the private chat so you can show that. But that's what I'm seeing, just a little bit, I think, of roll higher here on Microsoft. And seeing some interest starting to build at even 600. You're good. For Microsoft, I think it could be. I mean, I will say I like what I heard from Microsoft more than what I heard from Meta overall. I think Meta has some variations in how they're depreciating their GPUs that are a little generous that help to boost earnings, and that may be something that gets faded later on. But on the other side of it, Microsoft's cloud growth is robust. It's really impressive, and they seem to be back to that mode where Satya, who's the best CEO the company's ever had, in my opinion, is firing on all cylinders. He really has a vision and he's executing on it, and it's coming to fruition. Ooh, wow. Yeah, just seeing it popping out of this trend line. If you draw a trend line going back to December of 2024 into the present on SoFi, it looks like it had a head fake, kind of moved back below, retested the 20-day moving average, and now is popping right back above that trend line with some pretty significant volume this morning. Yeah, I drew that trend line to a little lower, so I was actually having the top, that second hit in that high right there. Yeah, yeah, exactly. Is this one of those technical analysis is astrology for gamblers moments? Is that what we're doing? Perfect. And no, just going back to S&P, we did see a nice bounce off that key one plus level, that 64.32, offering some support. Now testing that 64.44.25 pivot on the S&P futures, which brings us just below the BGL. That's the 21 EMA on a 5-minute chart. It is a really, really good momentum indicator. If you want something stupidly simple to day trade futures, that BGL is what you want to put on your chart, literally called the big green line. Yeah, 21 EMA on a 5-minute chart. Let's make it green. There you go. And thicken it up. Thicken that line up a bit too. Just to We've got the big green line. I love it. And I think the biggest thing here is just that if you're a corporate decision maker, you just sometimes don't know whether you're coming or going. There's so many cross currents of different things happening. We're getting trade deals, tariffs are being adjusted in real time. It's hard to plan as a company right now. We've heard that on some of the conference calls as well. And I think that's the biggest impact. Like, tariffs aside, it's more lack of certainty as to what do things look like 1, 2, 4, 5 years from now. 100%. And in fact, if you look at policy uncertainty, it actually tracked very well with the VIX. So policy uncertainty peaked in April when all the craziness was going on. So did the VIX. And since then, overall metrics of policy uncertainty have been coming down. And with it, we've had this implied bid behind the market. And I think that's a continuing theme. I think you bring up a great point. As we see more solid policy outlooks, for what companies are going to be able to do with, say, China or India, Vietnam or South Korea or other key trade partners, I think that will be beneficial to those specific companies. Yes. Schrodinger's guidance. Sorry. I was saying Schrodinger's guidance. Sorry.
Upper shadows here, losing view after trying to regain it. CVNA, Carvana, this is making another move over its VWAP, trying to hit that 410 high of the regular session, and SoFi is just ripping, making a new high of 2368 now.
Wow.
Mayhem, question here for you. I don't know if you want to take this one. Mayhem, how do you feel about coin going into earnings? My instinct is that the crypto euphoria will crash hard, but not just yet. Any thoughts on coin at all?
I think that coin will probably do pretty well. But the question is it like some of these other stocks where it's sort of priced to perfection? Hood is probably the best analog for coin that I can pull out of my hat, just top of mind. These are stocks that are trading in that same meme basket, if you will. And I think that overall, they should show good execution and strong guidance. My question is, with a PE of 71 and, looking at price sales to 14 and all the other metrics that are grossly inflated, is that going to be enough? So what I would say is they need to provide an extraordinarily strong guide to keep people in this thing based on how it's priced. That's how I would look at it going.
Okay, so this is really all going to come down to the guide then.
I think so. Because
Okay.
I'm not really too concerned about their earnings. I think they'll be fine there. I think it's really, can they keep the optimism going? Because this is a psychological trade at this point. Earnings and fundamentals are all sort of secondary.
We mentioned Hood.
Speaking of Hood, yeah.
Bull. That one, I'm still thinking that we might see a little bit more downside in this, but I'm really looking at the 13 to 1310 area as support. Maybe even the 50-day SMA might provide support, but we're getting down to an area where I think support's going to start to kick in here, and then this price could finally turn around and go back up towards 18. So just waiting for that to all shake out. I still think there's a little bit more downside ahead.
Seeing some squeezy price action in AVXL, Anavex Life Sciences Corporation. Looks like they got some good news this morning too. Early treatment cuts Alzheimer progression by 20 months. So that's helping to unlock the squeeze, but you got 30% of this thing's float short.
Carvana new highs. It just broke out of the flagging formation that was putting in the regular session here. SoFi new highs as well. And Hood is ripping right now.
This AVXL, 25 days to cover in addition to that 30.5 short percent of float. So you're absolutely right about the squeeze here. This did pull back a little bit, but maybe watch this one, 1250, your upside level to break there.
Yeah, this one's got a pretty decent chart. As long as it stays above the 20-day, I'd be looking for continuation.
Okay, 14 also looks to be a pretty important level up there. PEs don't matter when theme and growth are hot, and we are seeing that in a number of names. Jay, good morning, Robert. Great to see you. Yeah, we're living that. That's a good way of putting it.
That's what happens. That's the only explanation for why Nvidia kept going. I think it was just so hot. Oh yeah, Generac has been great. Remember when we started talking about that as soon as hurricane season was on the verge of beginning? That's been great so far. Costco looking good too.
Yeah, as I was saying, Costco ripping out of the open here.
And with weather patterns becoming a bit more volatile and power grids becoming a bit less reliable because of demand, Generac has some serious tailwinds, I should say.
Oh yeah,
moving forward.
And they're very good on the seasonality too. Like as soon as we start getting into the throes of hurricane season, that just has really good seasonality all the way up until the end of November.
Makes a lot of sense.
Oh, and I'm helping them too because I bought one last year.
There you go.
Yeah. And yes, great job, Robert. Doing well with GNRC, and you're still holding Huntington Ingalls. That's great.
Oh boy. There's a complete trash REIT that could be a short squeeze. It's Medical Properties Trust, MPW, with 35% of its float short here. And it's starting to look like it wants to make a move. I'd love to see it break above the 50-day. If it could do that on a closing basis, I think it could surge. I don't want to buy this thing and hold it for any period of time. It is a horrible company with horrible management, but squeezes, we got to kind of suspend all of that consternation and just trade what's in front of us.
That 200-day SMA lines up pretty well with some resistance areas going back to April and February. So looks like you could, if you do get a recapture of that 50-day SMA, 475 could be the next upside target.
Yeah, we'll keep that one on the radar.
Yeah, they happen to. Oh, wow. Okay, so your calls are for September. Great job. Let's see here. What else we have going on? So PBM still trying to deal with this 850 area. It's about where VWAP is. Looks like it's trying to push up away from VWAP. It's still getting support. Meanwhile, Hood continues to rip. SoFi continues to rip. CVNA just put in a new session high.
Thing is a monster.
Yeah. And we might be seeing a lot of window dressing today since this is the end of the month. Tomorrow we get monthly inflows. And then we enter some volatile seasonality in August. We're going to be whipping around quite a bit this month, I believe.
More sideways than anything else in August, yeah. Still nothing on FIG. I've got that in another chart here, Big Bear Hug. I'll mention it as soon as I see that first opening candle. Mayhem, just out of curiosity, do you do IPOs? Are you interested in Figma at all?
I do IPOs where there's a company that I want to buy. I haven't researched Figma as much as I probably should, but what are you guys looking at on it?
Yeah, so it priced here between 32 and 30, or excuse me, 30 and 32. I believe that the opening price looks to be about 33. The reason I'm interested in this is because I know that our price between 30 and 32. It looks like it's going to open at 33. We'll see if that changes. I'm interested in this because I know that we use this here at Benzinga. Well, I read on the preview for the IPO here that 94% of Fortune 500 companies use this. And then we had another, let me get his actual title here because he had some rather, I guess, provocative comments about how this is going to be the meme stock of meme stocks, frankly. Let me get you that exact quote here so I don't butcher it. Figma is going to be a meme stock beyond all comprehension. This is Nikita Bier. I might be pronouncing the name wrong. This is head of product at X.
That was an amazing ascent for him too. Like he posted, I think a year and a half ago that I would really love to be head of product at X. They give a whole thread of explanations as to why he'd be qualified for it. And I think it was like 6 or 9 months later, Musk was like, come on board. You're the new head of product.
So his Twitter CV is what got him the job.
Yes.
Fantastic. I absolutely love that.
I do too.
I absolutely love that. You know, it's what's funny about that is I actually read an article. I don't have it handy here, but I read an article that most hiring managers or whoever's doing the hiring say that like some 90% of resumes are written by AI.
Mm-hmm.
And so it's nice to see that because that's probably not the case here on X. Those stats that I was giving you, 95% of Fortune 500 companies and 78% of Forbes Global 2000 firms all use Figma. Some of the major clients include Microsoft, Alphabet, and Salesforce.
Why wouldn't people use AI to write their resume? You have AI reading every single one of them. Anyway.
That's 100% exactly right. Exactly right. It's like, you know, we're almost getting to a point where we have a sort of like AI outsourcing all of our interaction. I saw a really funny comic where like someone was like, oh, I can't possibly write a 2-page email to, you know, really elucidate my idea. So I'm going to punch a couple sentences into ChatGPT and then it writes this big multi-page email. And then the lady that receives it's like, I can't possibly be bothered to read all of this. I'm going to put it into ChatGPT and it pulls it back into those few sentences.
And that might as well just sent a few sentences, cut out the AI there.
That's the zeitgeist of society right now. Man. AI is the arbiter between us now.
Skynet is going to take over. You heard it here first, folks.
Yes. And I am an AI, apparently.
Yeah.
That's right.
They're asking if you have a face. I was going to tell them it's 3D printed.
Perfect.
Sorry, MBIS here. Several of you have mentioned this AI name, this ripping out of the gate here. Unsurprised, considering some of the other AI names that are moving.
Interesting.
PAPL is getting some more movement here. New session highs, still not above the pre-market highs, but making some big moves here. ONCO not doing the same. Got rejected at VWAP. SNGX, that's got new session highs. Pulling off of that right now. Went up to 249. Carvana still going higher. SoFi still going higher. Hood still going higher, but pulling back now.
I'll tell you what, that SoFi trade, that's the trade of the day here. Izzy, what's your target on SoFi? Because we just got above this trend. I believe that's what this is. Yeah, we just poked above this trend line here that Mayhem was talking about. We continue to move away from that. SoFi here approaching 24.
Seeing some interesting sweeps in Hut 8 Corporation. Stock is presently trading up nearly 8%, but these sweeps are targeting $30. And let's see where that expiration is. That's going to be for October 17th. And the pattern on this thing is very interesting here. If it could break above 22, I think it's got some chunky room higher.
And you said 40 were those calls, huh?
30.
30. Okay. Now 30, that makes a lot of sense, right? Because this is clearly the high from the end of last year.
Yeah, a lot of supply up there too, so I wouldn't think it could be taken too much higher without some resistance. And also, I guess if it did what we're talking about here, it would start to invalidate the potential of a head and shoulders pattern as well, which tends to be bullish when there's that
Yep.
invalidation.
Yep. Oh, God,
VMRE.
you're right. Let me actually draw that on here. Sorry, 13.
VMRE finally getting some recapturing of the VWAP here. We'll see if this gets going here. It's got to trade through a lot of pre-market consolidation to go higher, but now it's starting to get rejected. But this is encouraging to see that it's finally trying to make a move over the VWAP here. If we can close this candle above the VWAP, may start seeing this trade a little bit better. But like I said, that consolidation from the pre-market, lots of supply to choose from, to chew through.
SLXN here looks like a big pop into a halt here, and I have the volume turned off. I was like, yep, that's on a ton of volume. SLXN popping into a halt. I didn't see any news on this. The stock's up 50%.
PAPL higher now.
Selexion,
sorry, go ahead.
Nope. Selexion Therapeutics announces new preclinical data revealing unprecedented inhibition rates of up to 97% in pancreatic cancer cells and almost 90% in colorectal cancer cells. So really good data here, preclinical data on some of its cancer treatments. I guess now I'm unsurprised that this thing has popped into an upside halt.
If that is something that they can manifest on a larger scale, that is wonderful news for all of humanity.
Yeah, it sure is here. Let's see. 13, I know we often talk about how, okay, so they got $6 million in cash here on their balance sheet, and I believe this was what, phase 2? This was phase 2-3 clinical trial. So they're still going to need money for that, huh?
Oh, yeah.
I would imagine they don't have any revenue, 6 million cash. I mean, it might not be a capital raise right away, but yeah, eventually they will need it, especially if they're in phase 2. And you have to go and look and see what else they have in their pipeline, because that's just more cash leaving the company.
This did reverse split 1 for 15 2 days ago. Big time shout out there. Nice call, Rats.
It's going through all the motions of the reverse split, the NASDAQ recompliance, reverse split, capital raise, regain the dollar and the minimum market cap amount, and they're off. So they're going through all the motions. Looks like they have several different drugs that they're working on. One is going to be starting phase 1 the second half of next year, and the other is going to start their initial preclinical study in the second half of this year.
13, are you aimed away from your mic?
I'm looking away from it. So
yeah, okay, that's much better. Much better. I'm just making sure.
Yeah, so I'll just do this. Yeah, so
that's what I do.
They've got other drugs in the pipeline they're working on. Some haven't even entered phase 1 yet, so they will have to raise cash eventually, unless they get some kind of partner to help bring in money or some private placement. But yes, capital raise will have to come.
Quick update on options flow. APP got some pretty big flow this morning, targeting the 410 strike for August 15th, just a little over 2 weeks away. And I gotta say, I'm starting to like the way this chart looks, because it looks like it wants to reverse here, breaking above the 50 and the 20 recently, breaking above this descending trend line from the highs in February, and then drawing a second point in the highs in June. It looks like this thing is starting to get its mojo back, and 410 would be a pretty reasonable upside target for where this move could take us near term. It would also help us fill a gap from June.
Yeah, and this also, too, this to me here, especially with that trend line that you just outlined, Mayhem, it sure looks like this is actually invalidating the head and shoulders pattern, especially if it trades up to that 410, 430 area here. There are a number of you folks that trade app. Robert, it looks like you're trading app. I think Yassine has been on this. I know Lion has been on this, although he's on vacation hiking in the mountains, so he's winning just on its own.
That's pure winning.
Yeah, pure winning here. APP gets good stuff there. On APP, I'm actually seeing some 500 calls come across the tape now.
Ooh, spicy.
That might just be kind of a shorter term trade, though.
The gap that you're talking about in AP and app, you have the low from that candle that fills the gap at 413.23, and the close that day was 417.89. So could be in the in between those two, maybe like 415, but I like your 410 area too.
ALAB here getting a mention. ALAB actually approaching the recent double top that sent us on the down move down to 60. That looks like that's at about 147. Jay, I think you had said yesterday, right? If Intel investors had gone to the spinoff ALAB, they'd have been doing pretty well here. Looks like ALAB continuation here. ALAB having earnings in 5 days from now. That's going to be Tuesday after the market closes next week.
Lion is touching grass. SNGX, new highs now 260. And looks like we got a pullback from PAPL. The RME back underneath VWAP. And PBM is halted to the downside.
Drew says he got one FIG share in his allocation.
There you go.
Hey, at least you got one, Drew. Kathy, did you end up getting your allocation yet?
You can go to those shareholder meetings now.
With your one share.
Yep. Even a fractional share. Heck. So another one coming up on the radar here, EZPW. This is a pawn shop stock. Interesting stuff. But I like the chart here quite a bit. Bouncing off the 50-week, breaking above the 20-week, rising over 11% today. And this thing has got a reasonable amount of short interest, and it's not a super active trader, small float, so it could take a little while for this to be covered, maybe 15, 20 days.
Easy PW. That's not the gold and silver pawn shop in Las Vegas that they made a show out of, is it?
No, this is like engaged in offering pawn loans. So there's a lending side to this, and I think that's why this is maybe getting some activity here, because we've been seeing a lot of these other mortgage companies and lenders get some attention. It wouldn't surprise me if we ended up getting some of those pawn shops as well. And then you also have the short interest on this as well, right?
Yeah.
Big time short interest. 21% of the float shorted, 12, almost 13 days to cover.
SGNX. Wow, what a call, Tuna.
Yeah.
The Tuna AI signal is popping here today. Ring that register on SGNX. Big move right there through 270, right here at the highs. Volume actually looks pretty good. Just make sure you get yourself paid on that one.
What is that? 100% runner? I'm just kidding, Smoke.
Here we go. Kathy also saying, just looked, I also got one share of FIG. So let me ask you, we got two folks in here. I know we'd like probably a bigger sample size than that, but does this tell you that retail was kind of after Figma if you folks are only getting one share allocated?
I think so.
Yeah, to me, it seems like there were probably a lot of people that put in their allocation for that. I almost wonder I wonder how this is going to trade when it opens.
I think it's oversubscribed and it's going to pop hard based on what we're seeing, but we'll have to watch. But overall, I'm encouraged. Because there aren't really that many IPOs going out this, around now versus other IPO peaks. So it still seems like we're kind of early in that cycle as well.
Here we go with VRME. That just got another lift. Going through the consolidation of the pre-market right now. We're trying to.
Nice trade, Mo. You get a register ring for that. Jay saying, Ryan, read the chat on Yosh. The chat will love it. Where is that? Is there any chance you can repost it? I don't know if I'm going to be able to find it here.
Wow, what happened there?
But what did happen here?
It doubled, then it was like, nah, never mind.
That could be a big illiquid move too.
Yeah.
Nothing fresh on this one. Let's see what this is. Restaurant operator.
Those have been doing really well. Consumer discretionary coming back.
Yeah, except for Portillo's, the one I have. Yeah, Yoshiharu serves the perfect ideal ramen. Now I'm hungry, damn it. As well as offers customers a wide variety of sushi, bento menus, and other favorite Japanese cuisines.
That's why you said the chat will love it, because of the whole food element that we keep bringing up.
Oh, I get it, Jay. Good
and
stuff,
now we all
Jay.
want ramen. Mission accomplished.
I know I do. I know I do.
I do too.
What are we getting here? We're still getting some more upside out of SNGX. That hit a high of 279. Might be getting a little bit of a pull here. CDNA, that's coming back in a little bit. SoFi trying to make some more moves upward. Hood, after getting a pullback, we've rebounded. This is looking like it's trying to go towards 110 right now. Currently 108.25.
And going back to S&P, if we pull up that SPY chart with the BGL, you can see how it's just perfect resistance overhead, bumping our head on it over and over again, balancing out around this 6444.25 pivot on September S&P futures. But this is why I like watching that level, because it tends to be pretty decisive. And now we've got a pretty clean rejection there.
I'll tell you what, that the BGL, the big green line, that's working here. Oh, so I should have kept going, Jay. It went from Japanese food to house flipping.
What?
Yeah, Yosh. So it changed its business model from Japanese food to house flipping. Okay.
Wow.
A tad skeptical on that one, Jay.
Can we throw some crypto, AI, and quantum in there just to kind of round it out?
What about
Sure.
houses in space?
Might as well throw in a partnership with NVIDIA and SpaceX while we're at it. We'll really get this thing kicked up. Market here pulling. Just you were just outlining the SPY staying under that 21 EMA. Look across the board here. NASDAQ and S&P both pulling here. PBM knifing, says Christoph. That trade done so far?
That looks like this could be. I mean, it's getting support from where it was getting support in the pre-market. So we'll see if that holds up. But if not, then yeah, this is probably going to end up coming down to where it was closing yesterday.
And market internals are not so great. Advancers 52.1% versus decliners 41% across all U.S. listed equities. So pretty poor breadth overall today.
Yeah, I'm looking at the advanced decline line. I've got that at positive 49. So it is at the high. It came from negative 1,000 there, but that also looks like it's topping.
Looks like we're getting some more upside here in VRME, chewing through the consolidation that it was going through in the after hours and the pre-market. Looking for some movement up above 125, 130. It looks like there's a seller in the series of sellers in the way from 125 to 130 right now.
You guys want to see some stonk violence? Check out Confluent, CFLT, down over 30% today post earnings. This is what can happen with these growth stocks if they don't achieve the outlandish expectations that have been priced in. This thing absolutely murdered.
Stifel downgraded the stock from buy to hold and cut its price target from 30 to 21. Needham cut its price target from 26 to 24.
And we are now below the April lows on this thing.
Yeah, and we did trade beneath the August 2024 lows when the yen carry trade went beneath that too. The only other area that's lower that I can see is back in November of 2023. The low there was 1469.
Pretty much a perfect bear flag breakdown too.
Oh yeah.
So for folks out there that are playing these, just be real careful playing earnings and especially sizing into them. This is the horror story that can happen if you're not on the right side of these trades. And I say this because I know there's a lot of people out there excited to play earnings because they see the volatility. But, you know, this is the other side of that. When a company doesn't provide the kind of earnings or guidance that the market wants to see in this environment, and this is the worst for misses that we've seen since 2022, you're getting punished.
Careful with PAPL. It's starting to rise again. It looks like it wants to take out the session highs. Just be careful with this. It's on low volume and it's making some pretty spready moves, anywhere from about 10 to 20 cents. So just be careful with PAPL. This is also another one that has a low, very low micro float, under 1 million.
APLS, I'm seeing a number of repeat call sweeps here, all 100 or more contracts, about 35K per sweep there. This is the 25 call that expires in January of 2026. APLS reported earnings here today. Shares are trading higher after a beat here this morning.
I like the chart.
We are about 5-6 minutes away from the 10:30 volume leaves the market moment. So just keep that in mind. We are probably going to see some volume begin to leave the market. I think I'm probably going to be finished for the morning. This has been a pretty good morning, what with PBM, VRME, PAPL, SNGX, and a bunch of others having a nice run. But it looks like those are starting to come to an end.
Izzy here asking Mayhem 13 and Ryan asking the whole group here, when is the buy level on UNH? Well, we think I don't want to speak for the other gentleman here, but I think what we're doing is we're waiting for a 250 test here, that actual value 248.88. If we hold that, maybe that's one of your buys here, but I'd actually be a little bit more conservative on that. I wouldn't try catching the falling knife. I'd wait for that to confirm. I think we had some levels below the last time that we talked about this.
Yeah.
Can't remember exactly what they are though.
Yeah. Just looking at options, 250 is a really big level. Go ahead, 13.
Yeah, I mean, that 250 has been the target for a while, since before it lost 300. So this is really great to see where this ends up being a buy. Now, that's going to the way you do this for either a swing trade or a long-term investment, that's up to y'all. If I was going to be doing this, 250 would be at least where I would start, not go full in, because I still think this could go lower. But 250, that was a target that I've had for a while. So at the very least, I would maybe take a starter position there. But I feel like this still has more room to go to the downside.
Yeah, it seems like it's just in a deeply, deeply troubled sector, and then the company itself is also deeply troubled, and that's kind of that double whammy that's hitting it. And also, for me, when I'm buying things for a swing, especially, I really like to see a shift into positive momentum. And we're just not seeing anything that even vaguely resembles that. So this is still kind of on my no-touch list. Pretty much the whole health insurance space is for now. But this company in particular just seems to be one that, you could try to catch a falling knife and get cut over and over again.
Yeah, and to your point, the upside moves here have not been any type of trend change. Instead, it's just been a dead cat bounce.
Yeah,
and
a lot of people selling.
Yeah,
they're selling that.
Oscar here, speaking of healthcare, Oscar here, this is actually having a positive day, up 3%. We did see some call buying on Oscar earlier here today. Looks like this has slowed down just a little bit, but to your point, this is still in that sector that's kind of out of favor, I would say. This is a Tim Melvin pick. Does look like it's at a support area, so take it with a grain of salt.
Yeah, maybe it's putting in a higher low.
6 days on Oscar.
Maybe it's putting in a higher low here. That would be the upside case. I'd love to see it break above this confluence area between the 20-day and the 200-day to kind of confirm that.
It's crazy how United Health is, it's been more than cut in half, and it could still get cut in half again.
Yeah.
Eric's asking if you have any thoughts on Micron. What was interesting is that we had a bit of a conversation yesterday about how tech hardware seems to be falling a little bit out of favor, and we're starting to see more favor being moved into software.
Yep.
And I think the earnings with Microsoft and Meta kind of gave us a bigger picture of that. So it seems like I think the seasonality for or the cycle for hardware is kind of diminishing, where software is starting to ramp up. So, and hardware will be back, but right now it's more on the software side that attention is being paid.
And it's tough. This is a company that doesn't really have, great margins. Their profit margins are 18%, and they're going to be shrinking as they sell more and more of this high-speed memory that costs more to produce. So even though there's, overall, like you said, long-term trajectory is still solid. If you look at this thing on a monthly chart, for example, it's still very much in a solid uptrend. But short-term, I think it could get choppy, maybe see some consolidation or downside across the memory space and even some of the broader semiconductor spaces that are less sexy, that are not directly benefiting from AI. Micron's just started to get into that space. They hadn't really executed well with the high-speed memory. Hynix had been eating their lunch for a while.
I would like to see it hold $100. You have the 20-month SMA right in that area too. This is also an area where previously, like last year, going into this year, it was having a hard time staying above that area. You can see from the monthly candles, a lot of upper shadows there before we got that Liberation Day unwind. Since then, we've been able to get back above that. Now I want to see this $100 level hold up.
Real quickly, was just thinking about, you guys are having that discussion there about hardware versus software. Just thinking about Broadcom here and what you guys maybe think about Broadcom. This has obviously made an insane move, a double, frankly, from the Liberation Day lows here. Broadcom, what are your thoughts on this one? I definitely think we need a pullback, but just so you're aware, one of the reasons I'm asking about this is because we talked a little bit about August kind of being a sideways month. Broadcom actually has tremendous seasonality starting at the end of August. So starting from August 25th to the middle of December, you get unbelievably good seasonality here. In fact, you get 100% probable win rate here, average loss of 0 and an average gain of 17.5%. So part of me is wondering, do you guys think that there's maybe some more room here on Broadcom, or better still, frankly, if we spend August maybe chopping around, moving sideways, maybe a pullback here on Broadcom? Does that make this an interesting buy for you?
I personally wouldn't want to be a buyer here. I'd be a buyer on more meaningful pullbacks. I think
Yeah.
it is a little bit extended, kind of price to perfection. We do have earnings coming up, I think, in about a month. So that's another event, volatility catalyst to look forward to. But I on the one hand, will say they're executing incredibly well in AI, and they're scaling their offerings. Their AI centric processors that they're starting to get into to compete with NVIDIA, to also complement NVIDIA depending on how you're configuring your data centers. But on the other hand, this thing is extraordinarily expensive and priced to perfection. So any blip in their earnings or guidance could cause a precipitous decline. And that's where my concern would be.
I like Broadcom. I'm in it. I've owned it for some time, and as long as that 20-day SMA continues to provide support, I still think there's some more upside to be had. I agree that this thing does need to come back in. This is very extended, in my opinion. I would like to see a little bit of pullback here. Maybe bring the price down around 280. But I still think that long term, yes, this is going to be a great company to own. I do intend to hold this for a long time, but I do want to see some cooling off the price action. Ryan, to your point, I would love to see a lot of back and forth consolidation through the month of August. That'd be very good. I think that we'd go higher out of that consolidation.
Okay, so it seems like here consensus is a pullback on Broadcom to a support level might actually provide a long side trade there. Fair point about maybe not exposing yourself for that earnings print, which does look like it's at the beginning of September. I had that estimated around September 4th. Robert, did they confirm that? I don't have that marked as confirmed, but I can have our news desk reach out on that. It is going to be, so it lines up actually pretty well with that seasonality chart that I just showed you. I know that starts at the end of August. Maybe a week later, we expect those Broadcom earnings. So maybe if you wanted to not expose yourself to that, just wait for after the earnings print. But pretty good seasonality on that. Okay, good stuff. Let's hope we get a pullback here on Broadcom.
SNGX, this might, I don't know about the volume, but it looks like it's trying to make another session high. PAPL did make another session high. That popped up to 448. 448. Verify me. Looking to verify another upside move here. Trying to go back up towards 125. That's been some of the resistance going back into the pre-market as well.
129, 130, one of those areas to watch there on VRME. Joe's asking about PanW here. This is really kind of interesting action. PanW, great bounce yesterday. Some of the traders took advantage of. Today, however, though, we actually just sank again right out of the open here. We actually broke the lows, the intraday lows from yesterday here on PanW. Now, Joe's asking here, Joseph, sorry, is this acquisition really that crippling? Wasn't the PanW CEO on CNBC like yelling at investors yesterday, or am I mixing that up with another one, saying he knows what he's doing? Pretty sure that was this guy.
That usually works well.
Yeah.
I was going to say, so maybe you're getting a reaction to that.
I like the idea of their pivot more into cybersecurity software, but I don't know that CyberArk is going to be the best acquisition. And I think the $25 billion price tag has some folks scratching their heads about this. And maybe that's why the CEO is on the defensive at this point, kind of trying to say, no, we really do know what we're doing here. But to me, it's look, when you're in a tech company, M&A is even more risky than normal M&A. Are you going to be able to integrate what you're acquiring into your ecosystem such that it's an accretive acquisition? Most of the time, the answer to that question is no. And you've seen companies like Cisco fumble more often than execute gracefully in M&A. So I think those memories are percolating in the minds of investors that are selling this thing down. Now, long term, Palo Alto is a best of breed cybersecurity company.
No
So
question.
wherever it bottoms out, I think it's going to be a buying opportunity. I just wouldn't want to be early in that process. I'd let this thing settle out, start to show us some positive momentum again before wanting to get too aggressive.
That makes a lot of sense. We're down here at a support level, but to your point, I do think this could push maybe into that 160 handle, maybe 165.
You know what
I like
happens there?
165.
Inverted head and shoulders starts to form.
Yep. And we also have the 20-month at 172.58. So what I'd be looking for, since this has been an area where the price has gone down and traded beneath and recaptured, I could see where we go down to 165, maybe even lower, and then the price turns around and recaptures it. Now, this is the last day of the month, so depending on how this day ends up, could determine whether we close beneath or above this 20-month SMA. So just something to keep in mind. Here is the last day. Now, what happens tomorrow? Maybe we get some inflows that pulls this back up, but it still does look like we may end up going down to 65 at some point in August.
And
Here's your gamma chart for PanW, Mayhem.
Yeah, we've got that 170 put wall on PanW to watch as well. If we start to push below that, I'd be looking for continuation in rolling to some of those lower strikes we're talking about around 160, 165. But for now, we may get some support around 170. On the other side of it, call wall around 200. And you can see there's a lot more interest in downside protection on this gamma chart. There's probably folks that have hedged into this event, maybe even prior. Maybe they had some whispers that this was going to happen. But this is a chart that tells me people are more worried about protecting against downside than capturing upside in the current moment. And that's telling too.
Okay. That's really good stuff there. Really good stuff there. There you go, Perrycon. Looks like the bottom here, we're thinking 165, 170 currently.
And what's usually a good forward PE for a cybersecurity company?
I mean, 47 seems a little rich, right? Especially when they're on the hardware side of things more. I'm that's a good question as to what the average is for the space, but I'm going to say that it should be in the current market regime probably closer to 30, 35, which is still rich, but normal for this regime.
And since we're on the subject of cybersecurity and networks, Cloudflare reports today after the market closed, and they have a pretty interesting chart too. We're actually coming up to some November 2021 highs. Very similar chart to what was the one we were looking at earlier that looked very similar to this. Can't think of it right now, but this could go up to.
This looks like Broadcom.
Yeah, Broadcom. This looks like AVGO to me.
Okay, I thought it was a smaller one that we were looking at earlier. I don't know, like one of the SoFis or one of the movers. I'm not sure. But
this is a monster, though. What I will say, and this is in my forever portfolio and has been pretty much since IPO and been adding on weakness. This is a company that is executing in so many key spaces, whether it's cybersecurity, whether it's AI, whether it's helping to build out the cloud and the infrastructure that keeps websites online and protected from attacks. The CEO of this company, Matthew Prince, is actually a visionary. We may not agree with everything he says or does, but overall, he's more on the right side of tech trends than not. And that's one of the reasons I think Cloudflare continues to be one of those companies that even at absurd evaluations, when it pulls back, you just have to buy it.
Yeah, because what are the options saying? Because if with everything you just said, it seems like this could certainly hit 220 on a good earnings report.
Yeah, let's take a look. That's a great question. Just pulling up those gamma charts for Cloudflare now. And it looks like...
Go ahead.
Oh, no, go ahead.
No, I was going to say, while you're pulling them up, I can go with something here on PanW, but if you've got those ready, let's do it.
Yeah, 210 is the call wall for Cloudflare, and that would be what I'd be watching. You can already see interest rolling up, and this is the diametric opposite of the options chain on PanW. As you can see, there's so much more, I would say, fear of missing out priced into this thing, people looking for upside even all the way to 260.
Wow.
Okay, and real quickly here, I was asking about PanW. First of all, Tess says, I'll protect my PanW stock at this point, but I think there will be a pop at earnings in about 2 weeks here. Tess, good thing you made a short-term trade yesterday to kind of lower your cost basis anyway. And then here for Palo Alto, CEO Nikesh Arora recently stated that, quote, he knows what he's doing, end quote, particularly in the context of the company's acquisition of CyberArk and the broader cybersecurity landscape. He emphasized that Palo Alto Networks enters markets at their inflection point, and he believes the time for identity security is now, highlighting CyberArk's potential to disrupt this market. So indeed, it looks like he was the one telling investors to stuff it. He knows what he's doing.
It's an interesting look. I mean, it's worked out for Alex Karp of Palantir, but it doesn't always work out for everyone all the time.
He will openly mock short sellers.
Oh yeah, and Wall Street as a whole, and their analysts and everyone. He said, and it was kind of absurd with the way he was talking about short sellers and all that when Palantir's short interest was like 4%. He was like, oh gosh, they're really causing all these problems and they're all on drugs and da-da-da. And I'm looking at their short interest like, where are they? You guys are the ones. I mean, I was long Palantir and I'm still long. Yeah, and also, though, the biggest supply addition is coming from the way they do stock-based compensation. That's the biggest overhead that was on the stock at the time. It wasn't short sellers. It was executives cashing in on options.
Real quick, just as an update here, I'll get you in there. 13 on CNBC. They have the Chiron up saying awaiting Figma's first trade. They're talking about Figma. They got it loaded up on the board, so I think we're getting pretty close to ticker FIG opening for first trade here.
And as it was being pointed out by Webcoin, SNGX is knocking on the door of $3. We have some sellers in the way at $2.95. More volume, we can chew through all that on our way to $3. J. Rice mentioning CCJ.
Two huge sweeps in CLSK here. These are the 1450s that expire in November. That is going to, September. That's the monthly contract here. 2,300 in the first sweep and 2,300 in the second sweep. Those are 100K plus trades on each one.
It looks like
Good morning, Amanda. The market is choppy. I'm going to work out and nap. Okay. Have a good one, man. That sounds like, I know. I was going to say I'm kind of using that myself.
Been a fun morning though, but yeah, it is quite choppy, and we are getting some coming in from some of these names that we're moving. CVNA, that's coming down to at 65 EMA. SoFi coming down some more. PAPL after popping about 10 minutes ago, that's down to its VWAP again. BRME now beneath its VWAP, coming down to the session lows again. So all of these things are really starting to come in. PBM, that was a great trade, but it is not so great anymore.
And we're looking at options flow and SPX pretty balanced across the most active calls and puts. The most active call strike trading about 42,000. That's around SPX 6440. The most active put strike trading about 37,000, and that's just around SPX 6350. You've got a really big gamma level at 6400. These big even numbers tend to produce those levels. I would watch that as key support today. SPX 6400, you don't want to see a close below it, especially if we get some less than ideal earnings from Apple and Amazon. That would set us up for some pretty chunky downside. But that big gamma level, for now, acting as a magnet, kind of pulling us down towards it.
Brian here says, serious question. Why does Tuna never miss? This guy is on point all the time. SNGX was a pop. Well, there's a couple of reasons there. Number one, he's bright. Number two, he really likes stocks. Number three, he works hard. And number four, he doesn't make himself a victim. So because of all of those four things, he is extremely successful. His Tuna AI signal here is printing winners every day, Brian.
And he keeps an eye on those 100% runners.
I was glad you added that in. I wasn't going to go there myself.
That's okay. That's fun. SNGX, this thing is now over $3, knocking on the door 310, through it now, ripping up to 320, and see you later. SGDX above VWAP. We're also getting asked on PSIX thoughts. What's PSIX about here? Power Solutions.
I want to call it P6.
Okay. Let's call it P6.
Very agreeable today, 13. I'll take that.
It's easy. It just makes it easy. Geez, this thing has just been on an absolute tear since the Liberation Day unwind. like so many stocks, when this thing starts losing its 20-day SMA, it might begin to go lower, but it certainly seems like it's trying to push higher towards 100. What's the let's take a look around the horn here on this one.
CoreWeave trying to bust higher here. That's been choppy this morning, but it looks like it's trying to go.
Balance sheet looks fine, has revenue, profitable. I mean, I don't think I'd be a buyer up here, but it certainly looks like a great company. I don't know anything about it other than it's does power solutions. But no, I don't think I would like it up here. I think it's quite extended. I don't think there's a lot of meat left on the bone for trade. Maybe an investment. I don't know. But if I was going to show any interest in this, I would want to see lower prices first.
Here's something interesting. Copper down 22%, Freeport McMoran up 2%. Not often you see that combination.
Well,
in fact, probably. Sorry, go ahead.
Yeah, I was going to say, so Freeport, this really, okay, so this is up 2% from the close yesterday, but that basically closed on the lows here. We're still a ways away from where we started to fall out of bed.
Oh, yeah.
And I wouldn't be surprised if this ended up forming up a bear flag eventually.
Yeah, it's just interesting, just the contrast between the two. Copper was able to kind of put in a bit of a low yesterday. There was a lot of dip buying going on there. And then today we saw a pretty big continuation lower, breaking below yesterday's lows with a good amount of momentum here and a pretty high amount of volume the last 2 days. And the reason I also bring this up is all the industrial metals are taking it on the chin. They're part of those baskets that CTAs and other kinds of systematic traders tend to get into. And now they're forcibly de-risking out of that. A lot of folks getting killed in that space.
Real quick here, anyone that's into tokens and crypto, is this guy Dick in the chat here, is this for real or is this a spam comment? XAIX101.
Isn't that Musk's kid's name?
I mean, is that really what his name is? His name has
something like
numbers in
that.
it?
Yep, it does.
Okay, well, I mean, okay, well, I guess it's better than Moon Unit. I don't know. In any case, is this? It wasn't that. Let me look that up. Def Leppard or something like that. Someone, one of those classic rock stars named their kid Moon Unit. I'll get that for you and I'll get back to you. But let me know. Is this guy for real? Is this something real or is this okay? Because otherwise I'm going to ban him.
Oh, I don't know if it's real. I was commenting on Moon Unit. So just to be clear, that's Frank Zappa's daughter.
Frank
Moon
Zappa.
Unit
Thank you.
Zappa.
There you go. Yeah. See, look.
Don't do drugs, kids.
Seriously, this is your brain on drugs. Frank Zappa. Yeah. Okay. Yeah. Let me know. Is there anyone in here that knows? That's probably a bot. I'm thinking so too, but I feel really bad if I ban a bot or if I ban a person. But should we do it like the Gladiator? Thumbs up, thumbs down. Okay.
I'm the only AI allowed here, guys.
And this is for what? This is an XAI token.
I don't know. It's over. We figured it out. Thumbs down, 2 thumbs down. In fact, he's banned. Don't spam, kids. Don't do drugs and don't spam chat with a bunch of garbage.
Yeah.
All right. I just sent you something to, just because I was kind of curious myself, but the deed is done. So you can look at it whenever you want.
Yeah, this seems like a scam to me.
Okay. Fine.
That's okay. Yeah. Yep. Okay. Sorry about that, folks.
Back to Bitcoin.
Thank you for your attention to this matter. Okay.
S&P balancing out around 6,400 here too, that large gamma level we've been talking about since we started to see that pull.
Tess, you picked up UNH puts when? And congratulations if you got them before today. Not that today isn't, also printing, but man.
Oh my, Michelle, I work at a Lifetime Fitness part-time and I actually have a child and we actually have a child. Their parents named them Battle because their last name is Fields.
No.
Battlefields.
Please no.
No, she says that's the case.
That kid's going to grow up to play Call of Duty.
And not Battlefield. Take that.
Yep.
Take that. You know what's interesting here? So we have these big beats on Microsoft and Meta. Microsoft has retraced 50% of that move. You were just talking about how the S&P is coming in, so I still think we're in this environment where the news is getting sold. Now,
Yeah.
Meta is still holding higher here for that, but it's early in the day. We'll see if that turns around.
Yeah, and I was mentioning how we could see a lot of the similar price action with these that Google did, where it gapped up and then it filled that gap that day, and then we started trading better. Like we traded back up, all the way back up to where we almost where we were opened on Thursday last week.
Amazon giving back some of those pre-market gains as well. I think it was up 3-4%. Now it's up just over 1% here.
Tesla at the lows here as well. This actually near the lows for yesterday intraday. Mayhem, good call there on Amazon. My question on Amazon, one of the things I had said earlier before you got here was that the cloud revenue, the Azure cloud revenue from Microsoft's report should bode well for Amazon Web Services. Amazon traded up yesterday in sympathy with that, I think. Maybe you disagree, but I think
agree.
it traded up in sympathy with that. Okay, so now that we're getting a pullback here, does this set up for a potential earnings trade on Amazon?
I think so. I mean, I'm not one to regularly trade earnings, but if I was to put my hat out there, I think Amazon's likely to resolve higher. It has been a bit of a laggard, but also their cloud is firing on all cylinders. AWS is still a growth engine for this company. And I think what we're seeing from both Microsoft and Google, where, their cloud surpassed what the expectations were, sets us up for Amazon. The only thing about Amazon that concerns me a little bit is if we shift over to the e-commerce side of things, that Prime Day sale was not impressive at all. And we are seeing some signs that sales are slowing broadly across e-commerce, in part to do to the consumer kind of slowing down their participation in the economy.
Did we get because I know that last Prime Day was, I think, the longest one they've had.
Yeah.
Did we get an average day sales compared to last Prime Day's average day sales?
I want to say it was down 30-40% year over year.
Wow.
Yeah.
That's big.
And I think the reason they extended it is they were hoping that maybe just people were slow to participate this year and the extension didn't really manifest. Also, there's a lot of, I guess you could call them fake sales, where the day before Prime Day, a company will increase the price of their product so that then it can show, hey, we're now lower 40%. In reality, it's like a cent cheaper than it was.
So I have a secret for that. There is an app or an extension, a browser extension that you can add to your browser called Camel, which will show you a price history for all items on Amazon and what people actually paid. So when they say this is on sale minus 30%, you'll have the price history. You know if that's rubbish or if that's good info.
That's really helpful.
Camel is what it's called.
Camel cubed.
Jonathan Cooper is saying that he mentioned to me that the MSTR has earnings call tonight. Saylor says this will be the most important event in the history of strategy. Join if you're interested on the earnings call. So he's looking for thoughts. It's been climbing back up. I have the 385 area as a support level, support and resistance. It's now support. I don't have a whole lot of opinion on strategy, and I feel like without more information, the biggest event and the most important event in history is a little ambiguous for me. So I need to know a little bit more about what's happening here. But I mean, certainly would love to hear from others on what their thought is.
Yeah, I mean, one thing that I think is a bit of a headwind for this is there's so many companies out there doing Bitcoin treasury strategies that now you have all sorts of different proxies that you can walk into that aren't strategy. Add to that, there's more and more availability of ETFs and other types of funds for people to get crypto exposure. So I guess the question becomes, do you want to just have your strategy be strategy if you can't directly buy some of these other crypto instruments? Or are you going to diversify into a basket of, crypto treasury companies or even crypto ETFs and other types of proxies? I think that folks out there that are restricted from buying crypto directly also may see this administration allow more crypto products in retirement accounts. That's something they've been talking about as well. Yep. All of these would be headwinds because the big pitch for this is you can get crypto exposure in places you weren't able to before. That window is closing.
And I'm looking at the options. Mayhem, you let me know if you see anything different here. I don't see a whole lot in terms of MSTR options here ahead of the earnings print. I'm looking at the option chain. There's plenty of volume here in the August 8th weekly contract. So people are placing their bets, but it looks distributed across both calls and puts.
Yeah, the options chain that I'm seeing is a little more call heavy near spot with a call wall up there at 430 and a small put wall down here around 400.
Okay.
And then a slightly larger one at 380. I would say that this is another chain that looks like FOMO. There's much more concern about missing upside than protecting against downside going into earnings.
Okay. Here, and that's, you actually gave that to me. Sorry about that. Here
You're
you go.
good. Yeah, so we could see that, that put wall just below price down there at 400, then 380. And then up above, there's a lot of excitement priced into those 430 calls. But overall, this is a chain that is much more call heavy near price. And that tells me there's people that are much more concerned about missing upside than protecting against downside, which to me is not a great look ahead of earnings, because if it's not exactly what people want to hear, you've got a lot of folks that are probably going to want to hedge out those calls by shorting shares.
Okay. Good stuff there. Micro strategy. We'll see. I have no position for this.
Maybe they're going to change their name again this time to be macro strategy, since they went from micro to macro.
We went micro, then we went strategy. Now we go macro strategy.
Yep.
And then ultra strategy after that.
And then galaxy strategy after that.
Quantum strategy.
Oh, man.
Oh, there you go. That's the announcement coming tonight.
Yeah.
If that, oh my God. I'm gonna have a headache tomorrow if that's the case. Actually, no, I'm gonna watch a football game tonight and be smiling from ear to ear. Who am I
Polish
kidding?
Advil.
Markets pulling here. New lows on S&P futures coming up to the 6421.25 pivot. And, just has a heavy look to it. If you look at this thing from a microstructure point of view, even from the pre-market session and now, it's lower highs and lower lows. That's the look of this market, and that's one that tells me there's probably some room for continuation lower, especially if we become a little more put heavy on the volume.
And you're seeing the exact same thing here in the Qs as well. So this also at the lows here, higher or lower highs and lower lows. Sorry, 13.
Right, no, that's right. Brian, I'll ask you one better. Why does a biotech company need a crypto reserve? Why do any of these junky names need a crypto reserve at all?
Well, the biotech one's a little bit easier, right? Because they often have no revenue and they want to have something on their balance sheet. So you might as well throw a crypto asset in there that's liable to gain 100% in a year's time. You can make your balance sheet look better while you're literally setting cash on fire.
I mean, sure, it could do that, but it could also completely wipe out all their finances that way too. I think it's just, going from a more stable fiat currency to high risk crypto.
Yeah.
That's kind of the way I'm looking at it.
I would really be concerned that if we have a big de-risking moment in crypto, what the broader systematic effects can be with so many more companies having indirect and direct exposure.
And Jay, nice call on CCJ. This thing continues to go low, now getting support at 74.03. Looking around here at some of these other movers we were looking at. Looks like SNGX went all the way up to 336 before it pulled back. Still getting some support around 285. ONCO, that's sideways. PAPL, that's kind of gone sideways as well, as has VRME. PBM, though, this went all the way back down to where we were closing yesterday. So that completely went round trip. This would be the area where it could find some support and maybe try to turn up. But PBM seems done for now.
Okay. All right.
Take care, Jane.
Yeah, take care of yourself, Jane. Enjoy.
Got a real quick one to share with you all. Potential squeeze to watch here in AIRS, AIRS, Air Sculpt Technologies. The float is over 40% short, pretty small float overall, about 11 million shares, with an average volume about 700,000. So this thing, if you do see a covering event, and it seems more likely with the way momentum is going here, could have some serious legs.
Okay.
It's interesting.
Yeah,
this is a company that does body contouring procedures to remove unwanted fat with minimally invasive procedures. So instead of liposuction, it seems like lipo blowing, like because it's using air. So I mean, that's just kind of what I'm getting out of this. But it's interesting that this is the kind of company that it is. It uses, it's a body sculpting company, and there's been lots of insider buying. You have a buyer of 1 million shares back in June.
Oh yeah.
EDS aggregator blocker.
And then some in May too.
Yeah. Interesting stuff. And then you have that high short interest.
Okay. Good stuff there. We are up against the clock. Mayhem, thank you very much. 13,
Yep.
Thank you very much. Any closing words from you boys?
Go for it, man.
I just always a pleasure to be on with you all. Interesting trading day, making new lows again here. So, folks, please be careful out there, especially with some of these earnings plays. If you're on the wrong side of them and the companies don't meet the expectations that investors have, you could be punished brutally. So, just words of caution from us who have played this before and maybe decided not so much to play earnings anymore as a result of that. But no, awesome experience to be on with you all every time. Thank you.
As always, we'll see you next time. 13, any closing words?
It's great to be here with you, Marcus, and you, Ryan, and everybody else here in the chat. We have great stuff as always every day. Looking forward to tomorrow, and we're going to come back here. We'll find some more movers. We'll trade them. We'll make some money. It'll be a good time. Folks, have a great rest of your day. Maybe go outside, enjoy yourselves. I'll see you tomorrow. Take care.
Sounds good, 13. We are going to have Mark Petrino tomorrow. Enjoy the football game tonight if you choose to partake. Stay green, stay safe, stay focused. We'll see you tomorrow. Take care, everybody.
And folks, we're going to keep the stream going here, so stay tuned because we're going to be streaming all the way into earnings tonight. Just going to decide whether we're covering Apple or Amazon. So I'll put a poll out there for you all to check out as we get closer to the close. We'll know which one of those companies is going to be the ones we're covering. But stay tuned. There'll be a slight disruption in the stream as I'm shifted over to another system, but that should not take very long. So stay tuned here as we watch this market continuing to make new lows here on the S&P 500 in a rather dynamic trading day. Pretty two-way day overall from the pre-market to where we are now. And we're just going to shift views for a moment here. I want to show you what I'm watching before we shift streams. So we can see here on screen, this is the dynamic pivots that we have here at Traderade. And we can see we're cutting through the 6421.25 pivot, now testing it, moving back above. We are starting to get just a mild signal here, potential for a near-term scalpable bottom starting to form just based on the momentum that we're seeing. But take note that you had that very clean rejection of the big green line. Remember, that's the 21 EMA on a 5-minute chart, which this is. And since then, since that repeated rejection, we have just been moving lower and lower. So we'll see if we start to form a base here. On the upside, flows remain balanced between puts and calls on the S&P 500 index, so we could potentially get some midpoint reversion. If we do have a push higher, I'd be looking at the BGL as the first area for the market to prove itself, then the 6444.25 pivot. And then from there, we could start to push into some of these higher levels. But what's most likely if we get a move higher is we get kind of stuck around this area where you have a confluence of key one plus the midpoint and this pivot level. So that's what I'd be watching for if one is scalping this thing, potentially getting some longs in here, guarding that risk with the 6421.25 pivot and targeting the 6444.25 pivot for upside. All right, we've completed that stream swap over, and we're going to stay live here watching the S&P 500 futures as we approach earnings for Apple and Amazon. And stay tuned. Check out my Twitter feed, Mayhem for Markets, as we're going to put a poll out, see which one you guys want to see tonight, whether it's Amazon or Apple, to cover their earnings.
confidence in the S&P 500 extending some weakness here, down around spot 25% now. JP Morgan CEO Diamond says we should be a little cautious on rate decision. JP Morgan CEO Diamond says so far so good on tariff negotiations. The Fed bids for 4-week bills total $257.3 million. Mexican President Scheinbaum said I had a very good phone call with Trump on US tariffs. Mexico's President Scheinbaum says we get 90 days to build a long-term deal. And Scheinbaum says we avoided the increase in tariffs announced for Friday. WTI dropping as much as 1.9% following the broader markets here. So US stocks moving lower with the broader market as well. S&P still up 0.17%. The Nasdaq up 0.51%. The Dow is down 0.31%. So that's the S&P down 0.3%.
We're getting down to the options implied lows of the day for now with that warm and hot put, the second and most active put strikes on the SPX options chain coming into view here right near these session lows.
So in 5 minutes time now, at the bottom of the hour, the US is due to sell $95 billion in 4-week bills, prior high yield of 4.245% and a prior bid to cover of 2.69. Shortly expecting the results from the US 4-week bill auction.
And we're seeing some lows put in place around that hot put level, gamma 1 being the largest level of gamma exposure near price right now. And seeing a bit of a rebound off those lows, seeing some interest building in higher prices per the offers that we're seeing as well.
2.63. The US sells 95 billion and awards 1.54% of bids at high.
Sorry for the seizure-inducing nonsense there. I just wanted to add the outside liquidity levels here. We can see that buyers or bids are in excess of offers on the S&P by about 4.6 thousand here. That's another sign that you're starting to see more interest in buying coming into this market.
So Goldman Sachs CEO Solomon is to meet Trump at the White House, according to people familiar discussing the Trump meeting.
Welcome to the stream, folks. If you're just tuning in, we are seeing the S&P put in a bit of a low here. It touched down on the most active put strike area. There's some confluence with Gamma 1 and a bid down there, enough to offer support and give us a bit of a bounce higher from those lows. We can see interest is building in higher prices with a reasonably large offer at 64.30, 262 contracts on offer there. Also, we can see there's a fair amount of distance between where we are trading now and where there's interest expressed in some of these calls. The hot call and warm call, easily about 60 handles higher than current prices here. So that's going to be something else to keep an eye on as we get closer to these earnings announcements. Remember, yesterday we had that decline because of the Fed, because Powell really pulled expectations down for a September rate cut. That cut now priced with only 41% odds. Fed funds futures really only looking for one cut this year, more likely to occur in October or December. On the other side of it, when that announcement happened, the market swooned yesterday. Then we got really strong earnings from Meta and Microsoft, and we more than made up from those lows. And today we're just seeing a little bit of a give back from those overnight session gains. So once again, as we get into Apple and Amazon earnings, we may see some of these higher levels where price interest has been expressed in SPX realized, just as we did yesterday. So something to keep in the back of your mind. And another thing to take into consideration is the options flow here is pretty balanced between the two most active calls and the two most active puts. You can see that midpoint and key one, some confluence there with the point of control today. So that's probably where we could get to. We talked about that a little bit earlier if you're tuned in, that I'd be looking for some midpoint reversion here with balanced flows, suggesting a bit of a choppy day. And the point of control where most of volume has executed today, making that level even more magnetic. Add to it, you have key one plus a large level of positive gamma exposure or call exposure, also showing some confluence with the high of the day.
NVIDIA says it doesn't have backdoors in its chips and it won't allow backdoor access to its systems. So NVIDIA making comments in an emailed response to China questioning.
You can see we're starting to feel a little bit of resistance around this gamma 3 level here. It's also a large area in the session volume profile. If we're able to push above that area, I think we get some nice upward continuation, because you would start to see these buyers back on the right side of that trade, that green delta of 1,113, just showing you how aggressive buyers have been around this gamma 3 level. For now, though, we're consolidating. We're starting to build some acceptance of these gains, but I will note the BGL, not shown on screen, but that 21 EMA on a 5-minute chart, we've just tested it, bumped our head against it, and we are not yet breaking above it. So I'd like to see that break above gamma 3. We can also see right here, this is VWAP. This horizontal white line would also be constructive to see a break above that as well. And we are getting right up to that midpoint level we had talked about a little earlier as well. We're just seeing a little bit of shifting in the positioning of these options levels, but we are approaching that midpoint. That would be an area where I would look at taking some risk off if you were buying that bottom and scalping. Often is the case when options flow is pretty balanced like this. Midpoint is sort of an area you'll revert to, consolidate, and then you have some more directional risk building in either direction, meaning that the outcome is less certain unless we start to see flow build and become more decisive in the two most active calls or the two most active puts. And this is data that we share on our Traderade Discord for the community. You get access to this live stream, as well as updates to the options flow and SPX that come out every 2 minutes during regular trading hours. So can help folks that are trying to sharpen their edge, looking at options flow and how it impacts the broader market. SPX, of course, is the big daddy, about 1.25 trillion of notional trading every single day, and well over half of that targeting zero DTEs, and about 75% of that, to include the zero DTEs, of course, are options that expire in about a week or less. So lots and lots of short-dated flow. If you look at the SPX notional value traded daily, it's well in excess of all the US equity index futures contracts put together. So safe to say options are in the driver's seat. They have been for quite some time, and that makes it even more important to watch them when trying to make trading decisions, particularly on shorter time frames.
So we're shortly expecting the Freddie Mac mortgage rates. US 30-year fixed rate mortgages are down to 6.72% for July 31st week from 6.74% the prior week.
What we do here is go back, 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 back.
So Mexico's President Sheinbaum making further comments here, just saying the call with Trump lasted 40 minutes. Agreement reached with Trump safeguards the USMCA. Mexico's President Sheinbaum says we have the best deal possible. Says investing in Mexico is the best option. Mexico's President Sheinbaum says the deal we made does not imply further action on Mexico's part. Mexico's President Sheinbaum says I discussed with Trump possible investment in US firms. And Sheinbaum says that Mexico proposed how to reduce the trade deficit with the US. Mexico's President Scheinbaum says in the 90 days we will keep working on tariffs on other products like tomatoes and steel. Mexico's economy minister says all of this was achieved without a concession from Mexico. According to EIA data, US oil production rose to a record 13.49 million barrels per day in May. The SEC announces the launch of a crypto initiative to modernize securities rules and move markets on-chain, according to the SEC chair. Bitcoin seeing some strength to the upside here again. SEC announces a launch of a Project Crypto initiative to modernize securities rules and move markets on chain, according to the SEC chair. Crypto saw a move to the upside. So the SEC chair says the SEC will direct policy division to work with the crypto task force to implement the White House crypto recommendations. SEC chair says I have directed commission staff to draft clear rules for crypto distributions, custody, and trading. The SEC chair says most crypto assets are not securities.
Voice news disconnected.
The SEC chair says he's asked staff to work with firms seeking to distribute tokenized securities. So in 10 minutes' time, at the top of the hour, we are due to get the White House press briefing with Press Secretary Leavitt. Live video is on the calendar for those interested. We'll pop it out on the feed as well. And we have posted out the live video on the feed for those interested. Again, White House Press Secretary Leavitt press conference at the top of the hour. Fitch Ratings says the US dollar shows signs of stabilization on easing policy uncertainty. Keep in mind, seeing comments come through now from US Commerce Secretary Lutnick, says that Mexico has agreed to fully open its markets. So we're now 5 minutes away from the top of the hour, where we're due to hear comments from your White House Press Secretary Levitt. Again, the live video is on the feed for those interested. So that comment from US Commerce Secretary Lutnick came from a post on X, where again he says Mexico has agreed to drop non-tariff trade barriers, similar to earlier reports we heard from Trump and Shane Baum as well. Shortly expecting comments from White House Press Secretary Levitt.
According to a statement, Democratic Senator Markey proposes new bill to limit foreign data access by TikTok.
shortly expecting Fed reverse repo operation. $52 counterparties take $214.445 billion at Fed reverse repo operation.
And just a quick update, we can see we are stuck at that midpoint level, which has moved down a little bit from earlier. This is the level between the two most active call and put strikes. It tends to be a bit of a magnet when flow is balanced. And notice this too, the point of control dropped down to that midpoint. So you can see from multiple different areas, this is becoming a bit more of a magnet level for now. And this is a market that does continue to feel heavy. It looks like we're going to go and retest the lows of the day here. We also see put flow picking up in excess of that of calls. The most active call strike 58,000. The most active put strike 68,000 with confluence at Gamma 1. So it is starting to look a little heavier. We are seeing this area we talked about, this high volume node where a lot of buyers had executed buy side transactions. Being an area to watch, it's become an area of resistance overhead where more of those same buyers are now increasingly on the wrong side of that trade, underwater by about 12 handles. So you're going to probably see some more stop runs. This downside pressure continues. Add to it, the call wall has now rolled lower to SPX 6400. That is a pretty important level to keep on your radar, as we've seen it consistently provide resistance up until today, where we had that wall hop over, but immediately at the market open, you saw sellers really taking control of the price action. And that downside accelerating a bit here as we pull further and further away from the
Devin
point of
has arrived at the
control.
podium. Remember, the video is on the feed for you to watch.
Levitt on EU deal, investments to come by end of 2028. Levitt says Trump took action on pharma Thursday, sent letters to CEOs.
S&P 500 trims gains last up about 0.03%. The White House also says new reciprocal tariff rates take effect Friday, so tomorrow.
Levitt says Japan and South Korea have bespoke trade deals. Levitt says countries without deal or letter will hear from the US by tonight. Levitt says have announcements coming on G20. Levitt says Trump to sign executive order on trade today. Levitt says Trump to sign executive order today on tariffs. Levitt says Trump order today will have logistics on tariffs. Levitt says it was a very successful meeting with South Korea. Levitt says moving in the right direction with China. Levitt says direct communication with counterparts continue. Levitt says Greer and Besant continue talks with China counterparts. US stocks move lower. Dow down 0.4%, S&P 500 down 0.1%, Nasdaq down 0.18%. Levitt says Trump disagrees with leaders of France, Canada, and the UK on recognizing the Palestinian state.
So a reminder that we had Trump in the morning of the European session saying that Canada supporting Palestine makes it difficult to form trade agreement. Reminder, that's what he said in the beginning of the European session, or midnight Eastern time.
and Levitz ended her remarks to reporters.
And we have seen that pull down now. We saw the roll down of the most active put strikes to these lower levels, and now we've seen the S&P 500 magnetically pulled down to Gamma 1, where there's also the most active put strike trading, and that's around 6350 SPX. So this could be a short-term low unless we start to see that flow roll lower and become more aggressive on the put side. If we do, I would be watching this lower put wall around 6300 SPX and around 6332 or so on ES as the next level of support.
To keep in mind, you're seeing the S&P 500 here extending losses down around 0.38% now. The Canadian dollar also extends its decline, touching a 2-month low at 1.3856 per US dollar.
Nasdaq turns negative.
Seeing a pretty big bid appear under price here. You can see that around 63.63 ES. 674 contracts showing up on that bid.
That is reasonably large, and so now it comes down to auction theory. Is there enough supply to push through that level? Right now, sellers are giving us a bit of a no. As we can see, there is a bid coming in, and it's on reasonable delta volume. And that's right there just above the implied gamma flip level as well. So I think that's also worth watching. We haven't been in negative gamma territory for quite a while. We did pull into it. I think we'd start to see volatility come back. Another thing worth noting, that hot put, that most active put strike on SPX as confluence with gamma 1 is continuing to pick up in volume. Now 93,000 contracts traded there versus the hot call at 76,000. So there is certainly more interest in protecting against lower prices or even speculating on lower prices in today's price action.
So just keep in mind, we are seeing a rally in stocks fizzle out here as Trump's tariffs deadlines loom. The White House also demanded drug makers to slash US prices as well. We did see Trump send a variety of letters out to US drug making companies here. Again, the CEOs of these companies, he just asked them to kind of slash their drug prices. Again, they're seeing kind of stock slide as this goes on.
Seeing a pretty big bid come in, well, we saw that pretty big bid come in. I'm going to correct what I just said. Then it vanished as price ran away. Now we're seeing a pretty large offer coming in around the midpoint, kind of suggesting we'll get pulled into it, maybe get that midpoint reversion, maybe even get back to this point of control where there's a lot of buyers that are now increasingly off sides. But I would be pretty careful after that point, just given where flow is and how the overall trend of today has been lower highs and lower lows. So again, we could pick up, maybe as much as another 20, 30 points higher from here, but I would be cautious if such a move plays out with holding those longs. And we're continuing to see price pulled into this area of offered liquidity overhead. We talked about the potential for a bottom earlier when we saw that bid rejected and pulled. And now we're looking like we're going back to that midpoint reversion trade where options flow is pretty balanced between the most active puts and calls. Also of note, we're not seeing SPX options flow roll to lower strikes on the put side. Most of that interest is around that 63.50 strike or the hot put. So far, it looks like we've already kind of explored and even gone beyond the options implied price range to the downside. Now we're seeing price get back closer to that midpoint offer point of control confluence area, the sort of trifecta we have up here.
NYMEX WTI crude September futures settle at $69.26 a barrel, down 74 cents or 1.06%. NYMEX diesel August futures settle at $2.39 a gallon. NYMEX natural gas September futures settle at $3.10. NYMEX gasoline August futures settle at $2.21 a gallon.
Now we're pulling right into that confluence area now. A lot of offered liquidity up here. We can see there's a little bit of selling coming in. Nothing too noteworthy, but at least worth noting that the journey higher from here could be a little bit more challenged than what it took to get up into this area. And again, I would be looking for it to top out somewhere in the next 20, 25 handles or so on ES. Likely we get back up to the midpoint, maybe even the point of control, and that's also confluence with VWAP, by the way. That white line you can see on this column under SVP. That's where I would look for some more resistance to really start to become formidable.
Brent crude futures settle at $72.53 a barrel, down 71 cents or 0.97%.
Starbucks dips in following spike, last down 3.1%.
Seeing a pull down to the most active put strikes here, and that hot put level, that gamma 1 level, may offer some support. We also are starting to see some iceberg buying, tepid as it may be, coming in from some of these larger trading desks. So let's watch. Let's see if we get a little bit of a nibble here. A little bit of a bid to slow down the velocity of the selling around the current level. We are approaching the close here. See a little bit more downward pressure. Really, buyers not able to pull this one out, and put flow continued to increase at that most active put strike around SPX 6350. Got Amazon earnings coming right up after the close in just about
The ticker
13 minutes.
OMEX, seen a spike in activity as well. That's TMC, rare earth stocks.
And we'll be covering that earnings release as well as the call live, so stay tuned.
FIG, that is Figma. Continue to watch Figma after the IPO release. See the spike now on heavy volume. Opened earlier today.
Now, it's continued
At
rare
$9
earth
a
news coming
share,
from
and now
Reuters.
is
A
up
scoop.
into
But officials told a group of rare earths and tech
$121.76.
firms that they are pursuing pandemic-era approach
That
to
is
boost U.S.
Foxtrot,
critical
India
minerals
Golf,
production.
FIG.
Coming up after the close, earnings at 4 p.m. from Coinbase, COIN, also KLAC, KLA, PARA, Paramount Global. Right after that, earnings from Amazon. Amazon expecting $1.31 in earnings, AMZN. First Solar, FSLR, Rocket
Getting a pretty big
Companies,
pull.
RKT, Roku, ROKU, SYK Striker, RDDT Reddit at about 406, CLX Clorox. And then Apple reporting at 4:30 p.m. Eastern Time, expecting $1.42 from Apple, 89.04 billion in revenue for Alfalfa Papa Lima.
Market's making new lows into the close here, and we are approaching that gamma flip level as we see more of that institutional execution happening, particularly in the last 10 minutes of trading, where a lot of the volume tends to come in. And we can certainly see that in the way that we're transacting here. Certainly
Shares
not
of
a
Figma,
good look.
Hit a high of $124.63 off the highs now up at 120. Priced at $33, opened at 90.
Not a good look to see that as we're getting into the end of the week. We certainly don't want to close the week like this. So let's see what Amazon and Apple bring us tonight. I think that's going to be pretty important for deciding how this market closes out the week.
Cigna shares falling to the lows now. Charlie India on the Trump letters sent out to pharma healthcare companies. Timely.
Ticker CSX, Charlie Sandy X-Ray. Company is said to work with Goldman Sachs to explore options. Share seeing a spike in activity into the close. Continued heavy activity, CSX, new highs.
And just less than 3 minutes until the closing bell, we can see this gamma flip area and a major pivot just around the same spot at 63.55 could provide some support, but we are getting into earnings just after the bell, so it really is anyone's guess.
CSX set to work with Goldman Sachs to explore options. That from Bloomberg, Charlie Sandy X-Ray. Less than a minute to the close. Coming up right after the close, expecting Coinbase, COIN, KLAC, KLA, PARA, Paramount Global. Then Amazon should be right after that, like in the first minute after the close. AMZN, Amazon expecting $1.31.
Sellers exhaustion
WT,
detected in
Wisdom
S&P
Tree
500
to
futures.
buy alternative asset manager series partners. That's Whiskey Tango. PARA, Paramount Global, reporting 46 cents, the estimate 36 cents for Papa Alpha Romeo Alpha. PARA, Paramount Plus subscribers as of June 30th, 77.7 million. That's Papa Alpha Romeo Alpha. COHU, Kohu reporting a loss of 36 cents. The estimate was a loss of 39 cents, so that's better than expected. COHU. Amazon is out. Amazon reporting $1.68. The estimate on Amazon was $1.31. AMZN. Sales of 167.7 billion. The estimate was 161 billion. That's a big beat for Amazon. Sees Q3 sales of 174 billion to 179 billion. Operating margin of 11.4% for Amazon. AMZN, Amazon shares a bit volatile here. Right now at $237, up about $3 on Amazon. Again, large beat. And guidance from Amazon, though shares not now reversing a bit. AMZN. Amazon AWS sales for net sales for Q2 $30.9 billion versus the $30.77 billion estimate for AMZN. Amazon share is now trading lower.
Seeing some pretty intense selling pressure in Amazon here after hours. And pretty big delta on the offer side, about 270,000 more on offer than on bid. Company absolutely crushed earnings, but I'm going to have to pick apart the report to see what the market might not be liking.
CWST Casella Waste System is reporting 36 cents. The estimate on CWST was 32 cents, so that's a beat for Charlie Whiskey Sandy Tango. BJRI, BJ's Restaurants, 97 cents. The estimate was 70 cents. That's a beat for Bravo Juliet Romeo India. Sales $1.1 billion. The estimate was $365 million for BJ's. The estimate $363 million in sales. That's Bravo Juliet Romeo India. FSLR First Solar reporting $3.18. The estimate was $2.60, so that's a beat. Sales of $1.1 billion. The estimate $1.02 billion for FSLR. Foxtrot Sandy Lima Romeo. KLA reporting KLAC $9.38. The estimate was $8.56. That's a beat for Kilo Lima Alpha Charlie. Revenue of $3.17 billion. The estimate was $3.08 billion. That's KLAC. That's a beat on earnings and on revenue. Sees Q1 earnings of $7.51 to $9.05 for Kilo Lima Alpha Charlie. CRM Salesforce increases investment in Genesis to advance their customer experience. That's Charlie Romeo Michael. Roku sees full year 2025 net revenue of 4.65 billion. The estimate 375 million. That's ROKU. Coinbase is out. Coinbase shareholder letter. Reporting revenue of $1.5 billion. The estimate on Coinbase was 1.687 billion. $5.14 in earnings for Coinbase. The estimate was $1.35. That's Charlie Oscar, India, November. Coinbase shares selling off here. $345. Shares of Amazon also selling off here. $227. Clorox CLX, $2.87 for Clorox. The estimate was $2.21. That's a beat. Sales of $2 billion. The estimate on Clorox was $1.9 billion. That's a beat for Charlie Lima X-Ray CLX. MX Magnachip reporting a penny in earnings. The estimate was a loss of 17 cents. Revenue of 47.6 million. The estimate was 47.2 million. So that's a beat for Michael X-Ray. FIVN 59 reported adjusted earnings of 76 cents. The estimate on 59 was 65 cents, so that's a beat for Foxtrot India Victor November. Revenue of 283 million. The estimate was 275 million, so that's a beat for FIVN. Coming up at 4:30, earnings from Apple. Apple is expecting $1.42 in earnings. AAPL. EMN, Eastman Chemical, reporting earnings of $1.60. The estimate on Eastman Chemical was $1.77, so that's a miss for Echo Michael November. BBAI, Big Bear AI, and DEFCON AI to collaborate to advance next generation military readiness. That's Bravo Bravo Alpha India, BBAI. Shares of Coinbase right now down about $29 off the lows. Charlie Oscar India November following their report. MTZ, Mastech, reporting $1.09. The estimate was 97 cents for Michael Tango Zulu. That's a beat. TREE Lending Tree reported $1.13 adjusted. The estimate was 98 cents. That's a beat for TREE. Revenue 250 million. The estimate was 244 million for TREE. Tango Romeo Echo Echo. Roku board approved a up to $450 million share buyback plan for up through December 31st, 2026. That's ROKU. Romeo Oscar Kilo uniform. Roku shares off the highs now, right now at $98. Hit a high of $102.30. RKT, Rocket Company's up about 80 cents now, off the highs following their report. Romeo Kilo Tango. HR, Healthcare Realty Trust, cuts its quarterly dividend from 31 to 24 cents. That's Hotel Romeo. HR. Coming up in a little over 2 minutes, Apple. Expecting $1.42 in earnings and 89.04 billion in revenue. AAPL. FTFT, Future FinTech, announcing $30 million equity and prepaid financing agreement with institutional investors. That's FTFT. Apple coming up in 1 minute. Again, $1.42 is the expected earnings and 89.04 billion in revenue for Alfalfa Papa Lima. Apple reporting $1.57. The estimate was $1.42. Sales of $94 billion. The estimate was $89.04 billion. Apple reporting iPhone revenue of $44.58 billion. Greater China revenue of $15.37 billion. America's revenue $41.2 billion. Wearables and home and accessories revenue $7.4 billion for Apple. AAPL shares spiking here, $214.95 on Apple. Again, that earnings beat, $1.57 versus the $1.42 estimate, and revenue coming in about $5 billion. Sales coming in about $5 billion above estimate on Apple. Apple share is now at $211, up about $3.50 off the highs. HUN Huntsman, a loss of 92 cents on Hotel Uniform November. The estimate was a loss of 9 cents, so that's a wider loss than expected for Hotel Uniform November, HUN. Apple shares now pulled back 210.06. Shares up about $3 now on Apple. Apple's iPhone sales coming in well ahead of estimates.
Amazon conference call will be coming up at 5 p.m. Eastern in just about 25 minutes, and we'll be carrying that live. Stay tuned.
IRTC, iRhythm Technologies, announcing strategic partnership with Lucem Health. That's India Romeo Tango Charlie. NVS Novartis FDA approved Levio, Leqvio for first-line monotherapy use in hypercholesterolemia treatment. That's November Victor Sandy.
Overall, pretty subdued reaction to Amazon's earnings release. My take, and I've posted about this on social, is that the concern that caused the drop on what is otherwise a pretty impressive double beat, particularly on EPS, is that they're looking at operating income compression. Their guidance is at the lower end of what the estimate was. So that is going to be a concern, I think, going into the next quarter. I'm also interested to hear more from management about how they're executing in the cloud and e-commerce. It does look like e-commerce is a little bit soft. Cloud is showing a lot of strength. I would like to hear a little bit more about that as well. But overall, I think that Amazon delivered, but it was also priced to perfection. Apple, you could say, also delivered. They had two misses within the breakdown of their earnings. One of them was wearables, and the rest of their key segments, even China, beat. So Apple's actually comparatively looking a little bit better, but it is also still a kind of rudderless company where they haven't innovated or created a new impressive product, a must-have product in some time. The Vision Pro was ostensibly a flop. There wasn't much to like with the Vision Pro. And we could see that with the way that sales dropped off and they de-emphasized the product. And we haven't really seen Apple executing in any of these other frontier spaces like augmented reality. We are seeing Meta experiment there. We're even seeing companies like Snap having experimented there, but that could be a big growth area in the future as well. It doesn't really look like virtual reality is going to be that. And yes, you could argue the Vision Pro had an augmented reality element to it, but is anyone really going to be walking around with that giant headset in public? Obviously after the launch, it was briefly a status symbol until hipsters realized it wasn't cool. It wasn't selling. It wasn't the in thing. So we'll be watching for this Amazon earnings call. It's supposed to start here in just about 14 minutes. So we'll put on their Amazon call hold music here in the background. You can hear it now.
AREN, a reading group, announcing its share buyback. Up to 3 million shares over the next 12 months. That's Alfa Romeo Echo November.
And we're just about 8 minutes away now from the Amazon earnings call for Q2 2025. We're going to carry that. Should be about an hour from 5 p.m. to 6 p.m. Eastern. And then we're going to wrap up the stream for tonight. But definitely appreciate everyone tuning in. If you'd like to learn more about what we do, visit Traderade.com. You get 20% off on me if you'd like, exclusive to people watching this stream using the code Mayhem20 at checkout. That's Mayhem20. And check out Bookmap too if you're interested in learning more about how this software works. It is pretty darn cool, especially if you're trading, shorting, longing, shorter time frames. That's where I was going with that. And you can get up to 40% off visiting Traderade.com/bookmap.
Thank you for standing by. Good day, everyone, and welcome to the Amazon.com second quarter 2025 financial results teleconference. At this time, all participants are in a listen-only mode. After the presentation, we will conduct a question-and-answer session. Today's call is being recorded, and for opening remarks, I will be turning the call over to the Vice President of Investor Relations, Mr. Dave Files. Thank you, sir. Please go ahead.
Hello, and welcome to our Q2 2025 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have a press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2024. Our comments and responses to your questions reflect management's views as of today, July 31st, 2025 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions, tariff and trade policies, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now I'll turn the call over to Andy.
Thanks, Dave. Today we're reporting $167.7 billion in revenue, up 12% year over year, excluding the impact from foreign exchange rates. Operating income was $19.2 billion, up 31% year over year, and trailing 12-month free cash flow was $18.2 billion. We saw good progress across our various customer experiences and businesses this past quarter. Starting with stores, we feel good about both the inputs and outputs of the business. At Amazon, we think of our business in terms of inputs and outputs. Outputs are metrics like revenue or operating margin, but of course, you can't manage at the output level. It's the inputs that drive the outputs. So we spend virtually all of our time internally talking about and goaling against inputs. The inputs that matter most to customers in our stores business are selection, low prices, and speed of delivery. We've taken another step forward in selection these past few months, headlined by the much requested return of Nike's products to Amazon's retail store. We've added premium brands like Away, Aveda, Marc Jacobs fragrances, and brands from Saks on Amazon like Dolce & Gabbana, Etro, Stella McCartney, Rosetta Getty, and La Prairie. And we started expanding our very successful perishables pilot, where we offer customers perishables at the point of purchase when they're ordering other items that will be delivered same day from our same-day fulfillment nodes. We're seeing strong customer adoption, as 75% of customers who've used the service this year are first-time shoppers for perishables on Amazon, with 20% of customers who use the service returning multiple times within their first month. Our prices continue to be low and sharp for customers. It's one of the reasons our everyday essentials growth outpaced the rest of the business globally and represented 1 out of every 3 units sold. It's also why well-known research firm Profiterome has concluded for 8 years in a row that Amazon has the lowest prices of any U.S. retailer. But perhaps the clearest outputs are the rate at which our stores business grew this past quarter and the success we saw in our recent Prime Day event. This year's Prime Day was our biggest ever, with record sales, number of items sold, and number of Prime signups in the 3 weeks leading up to the Prime Day. Customers saved billions of dollars, and independent sellers, most of which are small and medium-sized businesses, saw their best sales performance of any Prime Day event yet. There continues to be a lot of noise about the impact that tariffs will have on retail prices and consumption. Much of it thus far has been wrong and misreported. As we said before, it's impossible to know what will happen. Where will tariffs finally settle, especially China? What happens when we deplete the inventory we forward bought or that our selling partners forward deployed in advance of the tariffs going into effect? If costs end up being higher, who will absorb them? But what we can share is what we've seen thus far, which is that through the first half of the year, we haven't yet seen diminishing demand nor prices meaningfully appreciating. We also have such diversity of sellers in our marketplace, over 2 million sellers in total, with differing strategies of whether to pass on higher costs to consumers, that customers are advantaged shopping at Amazon because they're more likely to find lower prices on the items they care about. Further improving delivery speed remains a key focus, and we continue to make progress. We've previously shared how we re-architected our U.S. inbound network into a regional structure, allowing us to place inventory and ship from locations closer to customers, improving speed and lowering costs. That work is delivering tangible results. In Q2, we've increased the share of orders moving through direct lanes where packages go straight from fulfillment to delivery without extra stops by over 40% year over year. We've also reduced the average distance packages traveled by 12% and lowered handling touches per unit by nearly 15%. We've made progress on order consolidation. With more products positioned locally, we're able to pack more items into each box and send fewer packages per order. That has helped drive higher units per box and improved overall cost to serve. Taken together, these improvements are making the network faster and structurally more efficient. We've also set another global speed record in Q2, delivering to Prime members at our fastest speeds ever. In the U.S., we delivered 30% more items same day or next day than during the same period last year. Items customers used to pick up locally in nearby physical stores are now arriving at their door, often within hours. And we're working to further improve delivery speeds no matter where customers live. We've recently announced plans to expand our same-day and next-day delivery to tens of millions of U.S. customers in more than 4,000 smaller cities, towns, and rural communities by the end of the year. Today, it's already available in more than 1,000 of these communities across the U.S. The early response from customers in these areas has been very positive. They're shopping more frequently and purchasing household essentials at meaningfully higher rates. Automation and robotics are also important contributors to improving cost efficiencies and driving better customer experiences over time. We deployed our 1 millionth robot across our global fulfillment network and unveiled innovations at our Last Mile Innovation Center, such as automated package sorting and a transformative technology that brings packages directly to employees at an ergonomic height. We rolled out Deep Fleet, our AI improves robot travel efficiency by 10%. At our scale, that's a big deal. Deep Fleet acts like a traffic management system to coordinate robots' movements to find optimal paths and reduce bottlenecks. For customers, it means faster delivery times and lower costs. For our team members, our robots handle more of the physically demanding tasks, making our operations network even safer. This combination of robotics and generative AI is just getting started. And while we've made significant progress, it's still early with respect to what we'll roll out in the next few years. Moving on to Amazon Ads, we're pleased with the strong growth, generating $15.7 billion of revenue in the quarter, growing 22% year over year. We continue to see strength across our broad portfolio of full-funnel advertising offerings that in the U.S. alone help advertisers reach an average ad-supported audience of more than 300 million across our own properties. These are properties like our retail marketplace, Prime Video, Twitch, and Fire TV, in live sports such as NFL, NASCAR, and the NBA, as well as third-party websites and apps. Another area we're excited about is our demand-side platform, or Amazon DSP. Our DSP enables advertisers to plan, activate, and measure full-funnel investments. Our trillions of proprietary browsing, shopping, and streaming signals paired with extensive supply-side relationships and our secure clean rooms provide advertisers the ability to optimize advertising, deliver greater precision, and drive efficient and effective advertising outcomes. And in June, we announced a momentous partnership with Roku, giving advertisers access to 80 million connected TV households, the largest authenticated connected TV footprint in the U.S., exclusively through Amazon DSP. It's a giant leap forward for advertisers, bringing best-in-class planning, audience precision, and performance to TV advertising. We also announced an integration between Disney's real-time ad exchange and Amazon DSP. This collaboration allows advertisers to gain direct access to Disney's premium inventory across platforms like Disney+, ESPN, and Hulu, while allowing them to leverage insights from both companies. When advertisers work with Amazon, they're not just buying ad space. They're benefiting from exceptional programming, innovative technology, and unrivaled signals, measurement, and audience development that provides strong relevancy for consumers and return on investment for brands. Moving on to AWS. In Q2, AWS grew 17.5% year over year and now has over a $123 billion annualized revenue run rate. We continue to help organizations of all sizes accelerate their transition to the cloud, signing new agreements with companies including PepsiCo, Airbnb, Peloton, NASDAQ, London Stock Exchange, Nissan Motor, GitLab, SAP, Warner Brothers Discovery, 12 Labs, FICO, Iberia Airlines, SK Telecom, and NatWest. In the rapidly evolving world of generative AI, AWS continues to build a large, fast-growing, triple-digit year-over-year percentage, multi-billion-dollar business with more demand than we have supply for at the moment. A few points to make. First, on the hardware side, our custom AI chip, Trainium 2, is landing capacity in larger quantities and has impressively emerged as the backbone for Anthropic's newest generation Claude models and many of our most essential offerings like Amazon Bedrock. We've also launched Amazon EC2 instances powered by NVIDIA Grace Blackwell superchips, AWS's most powerful NVIDIA GPU accelerated instance. Second, in Bedrock, we've recently added Anthropic's Claude 4, and it's the fastest growing model ever in Bedrock. We've also continued to see strong adoption of Amazon Nova, our own frontier model, and it's now the second most popular foundation model in Bedrock. New features in Nova allow customers to customize their Nova models in ways they can't on other foundation models, allowing organizations to infuse these models with their unique expertise while optimizing for cost and speed. As people have become excited about building agents, they're realizing they lack the tools to build them. In May, we released Strands, an open source way to more easily build agents that's taken off with a wide range of customers, with already 2,500 stars on GitHub and over 300,000 downloads on PyPI. Customers are also struggling with deploying agents into production in a secure and scalable way. It's holding up enterprises scaling agents. To help solve that problem, Bedrock just released Agent Core. Agent Core is a set of building blocks that gives customers the industry's first secure serverless runtime to provide both synchronous and asynchronous execution, agent identity and boundaries, a memory service, a gateway that translates services to MCP-compatible interfaces, built-in code execution and web browser tools, and an observability service. Customers are excited about Agent Core, and it frees them up to start deploying agents more expansively. Third, you're starting to see AWS release more powerful applications at the top layer of the AI stack. AWS Transform is an AWS agent that dramatically reduces mainframe modernization timelines from years to months, completes VMware to EC2 conversions up to 80 times faster, and makes it simple to move from .NET Windows to .NET Linux implementations, reducing licensing costs for .NET applications by up to 40%. We've also just released Curo, our new agentic integrated development environment coding agent. There's a lot of buzz around Curo, with several 100,000 developers using or requesting access in the first couple weeks, 100,000 used in the first 5 days of the preview. What struck a chord for developers is that Curo allows them to do vibe coding, where developers use natural language to chat with a coding agent to build code. But unlike other coding agents where developers don't really have any structure to build on top of, Curo allows developers to use natural language to build a spec, and then automatically updates that spec as they continue to vibe code or interact with Curo. This makes it much easier to go from prototyping to production. Customers also like Curo's event-driven agent hooks that act like an experienced developer catching things developers might miss. When developers save a React component, hooks update that test file. When they modify API endpoints, hooks refresh README files. When they're ready to commit, security hooks scan for leaked credentials. It's still very early for Curo, but it seems clear we're onto something customers love, and Curo has a chance to transform how developers build software. I say this frequently, but remember that 85 to 90% of worldwide IT spend is still on premises versus in the cloud. In the next 10 to 15 years, that equation is going to flip, further accelerated by companies' excitement for leveraging AI. So AWS has significantly broader functionality, stronger security and operational performance, and much deeper experience helping enterprises modernize their infrastructure bodes well for the AWS business moving forward. We're also seeing momentum in a number of our other areas across Amazon. I'll mention just a few. We're excited about our progress with Alexa Plus, our next generation assistant powered by generative AI. We've been rolling out early access to U.S. customers to start. Millions of customers have access now. We're seeing very positive feedback and will continue to iterate on the experience. We've recently completed our third successful launch of Project Kuiper. We haven't launched this service commercially yet, but already have an impressive amount of enterprise and government customers who have signed agreements to use Kuiper. In Prime Video Live Sports, our first season of NASCAR drew about 2 million viewers per race and the youngest audience among NASCAR broadcasters in more than a decade. We've recently announced our stellar broadcasting crew for our upcoming first NBA season, including Ian Eagle, Stan Van Gundy, Kevin Harlan, Dwayne Wade, Taylor Rooks, Blake Griffin, Dirk Nowitzki, Steve Nash, and Candace Parker. We also announced Denis Villeneuve, an Academy Award nominee, as the director for the next James Bond film. James Bond is in the hands of one of today's greatest filmmakers, and we cannot wait to get started on 007's next adventure. Finally, we continue to be very pleased with the growth and resonance of Amazon Pharmacy, as it's grown 50% year over year, year to date, on an already significant size base. A lot of good things happening across the company. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Let's start with our top-line financial results. Worldwide revenue was $167.7 billion, a 12% increase year over year, excluding the impact of foreign exchange. Foreign exchange had a $1.5 billion favorable impact to revenue in the quarter, as foreign currencies generally strengthened versus the US dollar. As a reminder, our Q2 revenue guidance had anticipated an unfavorable impact of approximately 10 basis points or $100 million. Worldwide operating income was $19.2 billion, which was $1.7 billion above the high end of our guidance range. Across our segments, we continue to prioritize cost-effective innovation that delivers value for our customers. In the North America segment, second quarter revenue was $100.1 billion, an increase of 11% year over year. International segment revenue was $36.8 billion, an increase of 11% year over year, excluding the impact of foreign exchange. Worldwide paid units grew 12% year over year. We remain focused on inputs that matter most to our customers. In the second quarter, we saw broad-based strength across our key performance metrics. This includes sharp pricing and more in-stock availability, as well as record delivery speeds for Prime members. Our millions of global sellers continue to be an important contributor to our vast selection. This helps customers find the items they need and does so at a competitive price. Our investment in tools, services, and fast delivery speeds help our selling partners reach more customers and further scale their businesses. In Q2, worldwide third-party seller unit mix was 62%, the highest ever, up on 100 basis points from Q2 of last year. We're also closely monitoring the macroeconomic environment, including the impact of tariffs. As Andy mentioned, our Q2 plan factored in a range of assumptions, not all of which materialized. We will continue to consider a range of assumptions going forward. Shifting to profitability, North America segment operating income was $7.5 billion, an increase of $2.5 billion year on year. North America operating margin was 7.5%, up 190 basis points year over year. International segment operating income was $1.5 billion, up $1.2 billion year over year. International operating margin was 4.1%, up 320 basis points year over year. We're pleased with the strong execution of our operations teams and the positive experience they delivered for customers. In Q2, we saw productivity gains in our transportation network, driven by improved inventory placement, strong leverage on high unit volumes, and higher levels of in-demand inventory from both first-party and third-party selling partners. These factors contributed to faster delivery speeds and lower costs. Outbound shipping costs were up 6% year over year and continue to grow at a meaningfully slower pace than unit growth, which, as I mentioned earlier, was up 12% year over year. We're committed to initiatives that further improve our cost structure. Strategic inventory placement drives multiple benefits, including better in-stock availability, shorter delivery routes, and faster customer delivery times. When we optimize inventory location, we can consolidate more items per package, reducing packaging materials and costs. To achieve this, we will continue to improve upon our inbound network, expand our U.S. same-day delivery facilities, including in rural communities, and implement robotics and automation across our facilities. While year-over-year improvements in operating margin may fluctuate, we have a purposeful strategy to achieve sustained progress over time. Shifting to advertising, advertising revenue grew 22% year over year, driven by sponsored products as we saw strong traffic in our stores. Advertising remains an important contributor to profitability in the North American international segments. Our full funnel advertising approach of connecting brands with customers is resonating. Moving next to our AWS segment, revenue is $30.9 billion, an increase of 17.5% year over year. AWS now has an annualized revenue run rate of more than $123 billion. During the second quarter, we continue to see growth in both our generative AI and non-generative AI businesses, as companies turn their attention to newer initiatives, bring more workloads to the cloud, restart or accelerate existing migrations from on-premise to the cloud, and tap into the power of generative AI. AWS operating income was $10.2 billion. We did see AWS segment margins decline from a record high of 39.5% in Q1 to 32.9% in Q2. The largest quarter-over-quarter driver of the decrease, or about half, is due to the seasonal step-up in stock-based compensation expense, driven by the timing of our annual compensation cycle. AWS margins also saw headwinds from higher depreciation expense, as well as unfavorable impacts from year-over-year fluctuations in foreign exchange rates. The depreciation expense is a result of our growing investments in capital expenditures in AWS. As we've said in the past, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we are making at any point in time. We will continue to invest more capital in chips, data centers, and power to pursue this unusually large opportunity that we have in generative AI. Now turning to our cash CapEx, which was $31.4 billion in Q2. We expect Q2 CapEx to be reasonably representative of our quarterly capital investment rate for the back half of this year. AWS continues to be the primary driver as we invest to support demand for our AI services and increasingly in custom silicon like Trainium, as well as tech infrastructure to support our North America and international segments. Additionally, we continue to invest in our fulfillment and transportation network to support growth of the business, improve delivery speeds, and lower our cost to serve by investing in same-day delivery facilities as well as robotics and automation. Collectively, these investments will support growth for many years to come. Moving on to our third quarter financial guidance. As a reminder, our guidance considers a range of possibilities which take into consideration Q2 results, trends we see quarter to date, and expectations around the macroeconomic environment, including tariffs. Q3 net sales are expected to be between $174 billion and $179.5 billion. We estimate the year-over-year impact of changes in foreign exchange rates based on current rates, which we expect to be a favorable impact of approximately 130 basis points. As a reminder, global currencies can fluctuate during the quarter. Q3 operating income is expected to be between $15.5 billion and $20.5 billion. In this dynamic environment, we'll focus on what matters most, delivering exceptional customer value through broad selection, competitive prices, and unmatched convenience. We'll remain focused on driving a better customer experience and believe putting customers first is the only reliable way to create lasting value for our shareholders. With that, let's move on to your questions.
Thank you. At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star one on your keypad. We ask that when you pose your question, you pick up your headsets to provide optimum sound quality. Once again, to initiate a question, please press star, then one on your touch-tone telephone at this time. Please hold while we poll for questions. Thank you. Our first question comes from Doug Anmuth with JP Morgan. Please proceed with your question.
Thanks so much for taking the questions. I have two. First, can you just help us understand with some more granularity how tariffs are being absorbed across suppliers, Amazon, and consumers, and whether you anticipate any change going forward? And then second, on AWS, we're seeing significantly faster cloud growth among the number 2 and 3 players in the space. I totally appreciate that AWS is coming off of a bigger base. But beyond that, do you think the output gap is due more to customer demand or infrastructure supply or both? Thanks.
Yeah, I'll take both those. I'll start with the tariffs. I think what we said a number of times, and we still believe it, is we just don't know what's going to happen moving forward. It's hard to know where the tariffs are going to settle, particularly in China. It's hard to know what will happen when we deplete, some of the pre-buys that we did on our own first-party retail, and then some of the forward deploying that we saw of our third-party selling partners. And when if costs go up over time, we're unsure at this point who's going to end up absorbing those higher costs. What we can tell you is what we've seen so far in the first half of the year. And in the first half, we just haven't seen diminished demand, and we haven't seen any kind of broad-scale ASP increases. And so that could change in the second half. There are a lot of things that we don't know, but that's what we've seen so far. On the question on AWS, the first thing I'd say is, as you said, Doug, in your question, year-over-year percentages and growth rates are always a function of the base in which you operate. And we have a meaningfully larger business in the AWS segment than others. I think the second player is about 65% of the size of AWS. And when we look at the results over the last number of quarters, there's sometimes where as far as we can tell, we're growing faster than others, and sometimes others are growing faster than us. But it's still like if you look at the second place player you're talking about, it's still a pretty significant segment, market segment leadership position that we have. And regardless, these are all really just moments in time. The last week is a moment in time too, where the reality of what really matters is what customers' experiences are in operating on these platforms. And if you look at what matters to customers, what they care a lot about what the operational performance is, what the availability is, what the durability is, what the latency and throughput is of the various services. And I think we have a pretty significant advantage in that area. They care a lot about security. If you have data that matters, and for most companies, they're putting data that they really care about in the cloud, the security and the privacy of that data matters a lot. And there are very different results in security in AWS than you'll see in other players. And you just look at what's happened the last couple months. You can just see kind of adventures at some of these players almost every month. And so very big difference, I think, in security. And then I think a really significant difference in functionality, where not just in the core infrastructure do we have a lot more functionality in our services, but I think if you look at our end-to-end offering in AWS, in AI, it's, from the bottom of the stack all the way to the top, it's pretty different. And so, I feel good about the inputs and the services that we're offering to customers across AI as well as non-AI. And we have more demand than we have capacity right now, so we could be doing more revenue and helping customers more, and we're working very hard on changing that outcome and how much capacity we have. But it's still you look at the business, it's a $123 billion annual revenue run rate business, and it's still early. I mean, how often do you have an opportunity that's $123 billion of annual revenue run rate where you say it's still early? It's a very unusual opportunity that we're very bullish about.
Thank you. Our next question comes from Mark Mahaney with Evercore. Please proceed with your question.
Okay, I'll stick with AWS to start it with. Could you just disclose the backlog number? And then in the past, I know you've talked about these supply constraints and hoping that they will sort of resolve themselves by the back half of the year. Is that still your intention? Anything that suggests that the supply constraints are going to get resolved earlier or later? And then a long-term question on Alexa Plus, and I've been experimenting with it for a while. Just Andy, when you think about the potential that has in terms of increasing engagement, maybe tapping into some services revenue, advertising, maybe a little bit more retail sales per household, you're just reducing friction. Just talk about how, from a financial perspective, how you think that could play out, how we would maybe see that in numbers. Thank you very much.
Hey, Mark, this is Dave. I'll just start off to give you the backlog figure. So at the end of the quarter, at June 30, that was $195 billion. So that's up about 25% year over year.
On the supply constraints as it relates to AWS and what we see there, as I mentioned, we have more demand than we have capacity at this point, and I think that, and you see, some of the constraints, they kind of exist in multiple places. The single biggest constraint is power. But you also see constraints off and on with chips, and then some of the components that, once you have the chips to actually make the servers, there are, sometimes you have new generations of chips that are a little bit later than they're supposed to be, and sometimes you get the chips, and the yield you get in making servers isn't what you expect when you get to ramp. So there are a bunch of those pieces today that we're working on. It's really true across the industry today. I don't believe that we will have fully resolved the amount of capacity we need for the amount of demand that we have in a couple quarters. I think it will take several quarters, but I do expect that it's going to get better each quarter, and I'm optimistic about that. I think on the Alexa question, I think I'd start by saying the Alexa Plus experience is so much better than I think our prior Alexa experience. She's much more intelligent than her prior self. She's much more capable. And I would say, unlike the other chatbots that are out there today who are good at answering questions but really can't take any action for you, Alexa Plus can take a lot of action for you, which is very compelling. So I can ask Alexa to play music for me, or play video for me, or move my music from one device to another, or if I'm listening to a a song that's on that's in a movie, I can ask Alexa Plus to actually put that movie scene on that of the song I'm playing, and it'll put it on my Prime Video on Fire TV. Or if I have guests coming over, I can say, Alexa, draw the curtains, put the light on the porch and the driveway, increase the temperature by 5 degrees, and put on music that would be great for a dinner party. And she does all that just for using natural language. So she can take a lot of actions, and it's compelling. And what we see so far, we've been rolling out Alexa Plus, starting in the U.S. It's with millions of customers now. The rest in the U.S. coming in the next couple of months, and starting the international rollout more broadly later in the year. And customers really like the experience. They recognize how much better it is than what it was before. The ratings are very high. The usage is much more expansive than what they were using before. The number of calls they're making is meaningfully higher. And I think there are a number of different areas where we'll see benefit. I think first, if you build the world's best personal assistant, that has a lot of utility for customers, and therefore it gets used a lot. So it means everything from people are excited about the devices that they can buy from us that has Alexa Plus enabled in it. People do a lot of shopping, and it's a delightful shopping experience that will keep getting better. I think over time there will be opportunities, as people are engaging in more multi-turn conversations, to have advertising play a role to help people find discovery, and also as a lever to drive revenue. And I think over time you could also imagine, as we keep adding functionality, that there could be some sort of subscription element beyond what there is today. Today, Prime members get Alexa Plus for free, and non-Prime members pay $19.99 a month for Alexa Plus. So I think it's still very early days, but we're very encouraged by the experience we're providing, and you can bet we're going to be iterating on it constantly.
Thank you. And our next question comes from the line of Colin Sebastian with Baird. Please proceed with your question.
Thanks for taking the questions. I guess first off, with respect to the international segment and the progress in both revenues and margins, I was hoping you could add maybe some color on the drivers of each of those and the sustainability of the improved efficiency in those markets. And then, Andy, you mentioned Kuiper. We haven't heard as much about that of late, so maybe if you could review where things stand relative to next year's launch target, timing of the service rollout, and maybe any perspective you have on the longer-term ambitions for the satellite network. Thank you.
Thanks, Colin. This is Brian. I'll start with the international segment question. So, very strong quarter for international segment, both on revenue growth and also on operating margin. Operating margin was up 320 basis points year over year to 4.1%. And if you look, that's the continuation of a strong progression we've seen quarter by quarter over the last 10 quarters. In total, we've seen an increase of close to 700 basis points during that time period. So really, it's a tale of two pieces of two segments, or excuse me, sections within international. One is the established countries like UK, Germany, and Japan, already at similar margin profiles to the U.S. So as they continue to grow, their contribution to profit will grow over time, and that's what we're seeing. In the quarter, we saw strong productivity in our transportation network in those countries, much like we saw in the U.S., and that's led to higher units per package and faster delivery speeds at lower cost. So again, the theme of lower cost to serve and also increased speed and better selection for customers continues to grow internationally as well. In our emerging countries, we're pleased with the progress we're making there. We've launched 8 countries, of course, in the last 5 years, and they're all varying degrees of upfront investment and different point in times in their journey to profitability. But they're all making very nice improvements quarter over quarter in growing selection, adding Prime members, and expanding our customer offerings. So I think what you're saying again is sustained improvement in those areas. Feel very good about it. The established countries are continuing to grow and develop and very much look like the United States. and the emerging countries, again, are all very different stages of growth right now.
On the Project Kuiper question, so Project Kuiper is our low Earth orbit satellite constellation that we're putting up and launching. And, there's 400 to 500 million households worldwide who don't have broadband connectivity. And it means they can't do a lot of the things we take for granted, like education online or business online or shopping or entertainment. There is really a digital divide, and it's much needed. And it's also true for enterprises and for governments that they have assets or needs to have visibility or connectivity that they can't get today, given the lack of broadband in a bunch of places around the world. So there's a high need. I would say that as we get our constellation into space, there will really be two players that have what I would consider the modern technology in low Earth orbit satellite. One is the incumbent in the market today, and the second will be Project Kuiper. I think that we will have a pretty meaningful differentiation here in performance. If you look at the performance of what I expect on the uplink and downlink, I think Project Kuiper will be advantaged. I also think the pricing is going to be very compelling for customers. And then I think if you think about the three key customer segments who want low Earth orbit satellite: consumers, enterprises, and governments. We have very strong relationships with all three customer segments, given our consumer businesses and our AWS business. And I think if you think about enterprises and governments, a lot of what they want to do when they take the data down from space is they actually want to put it into a cloud to do analysis, analytics, and AI and various operations on top of it. And the fact that Project Kuiper and AWS are so seamlessly connected is very attractive to enterprises and to governments. And I'm kind of amazed. We haven't launched Project Kuiper yet, but the number of enterprise and government agreements that have been signed already to use Project Kuiper is impressive. So we're working very hard to get the satellites into space. We have some delays with some of the rocket providers, but we have most of the available rocket launches over the next couple of years, and we're very hopeful to get the service into commercial beta later this year or early next year.
Thank you. And our next question comes from the line of Brian Novak with Morgan Stanley. Please proceed with your question.
Thanks for taking my questions. Andy, I have two for you on AWS. They're a little tough, but I'm gonna throw them at you. So there is a Wall Street finance person narrative right now that AWS is falling behind in Gen AI with concerns about share loss to peers, et cetera. Can you just sort of address that? What is your rebuttal to that? And talk to us about your and the team's most important focal points just to ensure that AWS stays on the nice edge of innovation versus hyperscaler peers. And then secondly, I know AWS is a big business, but is there any reason to assume it shouldn't accelerate in the back half and into 26, given the size of the opportunity and all of the Gen AI capabilities are going to sort of come to us in the next 12 months?
Yeah. So on the first one around AI, the first thing I would say is that I think it is so early right now in AI. If you look at what's really happening in the space, you have it's very top heavy. So you have a small number of very large frontier models that are being trained that spend a lot on computing. A couple of which are being trained on top of AWS, and others are being trained elsewhere. And then you also have, I would say, a relatively small number of very large-scale generative AI applications. The one category would be chatbots, with the largest by a fair bit being ChatGPT. But the other category being really, I'll call it coding agents. And so these are companies like Cursor, Vercel, and Lovable, and some of the companies like that. Again, several of which run significant chunks on top of AWS. And then you've got a very large number of generative AI applications that are in pilot mode, that are in pilots, or that are being developed as we speak, and a very substantial number of agents that also people are starting to try to build and figure out how to get into production in a broad way. But they're quite early, and many of them that are out there are, they're significant, but they're just smaller in terms of usage relative to some of those top-heavy applications I mentioned earlier. We have a very significant number of enterprises and startups who are running applications on top of AWS's AI services, and then but they're all, again, like the amount of usage and the expansiveness of the use cases and how much people are putting them into production and the number of agents that are going to exist, it's still just earlier stage than it's going to be. And so then when you think about what's going to matter in AI, what are customers going to care about when they're thinking about what infrastructure to use, I think you kind of have to look at the different layers of the stack. And, I think for those that are, both building models, but also just if you look at where the real costs are, they're going to ultimately be in inference. Today, so much of the costs in training because customers are really training their models and trying to figure out how to get applications into production. But it's at scale, 80 to 90% of the costs will be in inference because you only train periodically, but you're spitting out predictions and inferences all the time. And so what they're going to care a lot about is they're going to care about the compute and the hardware they're using. And, we have a very deep partnership with NVIDIA and will for as long as I can foresee. But we saw this movie in the CPU space with Intel where customers are hankering for better price performance. And so, we built, just like in the CPU space, where we built our own custom silicon in building Graviton, which is about 40% more price performant than the other leading x86 processors. We've done the same thing on the custom silicon side in AI with Trainium, and our second version of Trainium 2 has really, it's become the backbone of Anthropic's, next Claude models they're trading on top of, and it's become the backbone of Bedrock and the inference that we do. So I think a lot of the inference, it's about 30 to 40% better price performance than the other GPU providers out there right now, and we're already working on our third version of Trainium as well. So I think a lot of the, compute and the inference is going to ultimately be run on top of Trainium 2, and I think that price performance is going to matter to people as they get to scale. Then I would say that that middle layer of the stack are really, it's a combination of services that customers care about to be able to build models and then to be able to leverage existing leading frontier models and then build, high quality generative AI applications that do inference at scale. And, we see it for people building models. They continue to use SageMaker AI very expansively. And then Bedrock, when you're leveraging leading frontier models, is also growing very substantially. And, as I said in my opening comments, the number of agents at scale is still really small in the scheme of what's going to be the case. But part of the problem is it's actually hard to actually build agents, and it's hard to deploy these agents in a secure and scalable way. And so I think the launches we made recently in Strands that make it much easier to build agents, and then Agent Core that make it much easier to deploy at scale and in a secure way, are being very well received, and customers are excited. It's going to change what's possible on the agent side. And then I think that you've got a very large number. I mean, remember, 85 to 90% of the global IT spend is still on premises. If you believe that equation is going to flip, which I do, and we do, you have a lot of legacy infrastructure that you've got to move. These are mainframes. These are VMware's instances. And, when we build agents like AWS Transform that make it much easier to move mainframes to the cloud, much easier to move VMware to the cloud, much easier to move .NET Windows to .NET Linux to save money. Like, those are compelling for enterprises, or things like Curo that allow customers to develop in a much easier way and in a much more structured way, which is why I think people are excited about it. So I think I really like the inputs in the set of services that we're building in the AI space today. Customers really like them, and it's resonating with them. I still think it's very early days in AI and in terms of adoption. But the other thing I would just say is that remember, because we're at a stage right now where so much of the activity is training and figuring out how to get your generative AI applications into production, people aren't paying as close attention as they will in making sure that those generative AI applications are operating where the rest of their data and infrastructure is. Remember, a lot of generative AI inference is just going to be another building block like compute, storage, and database. And so people are going to actually want to run those applications close to where the other applications are running, where their data is. There's just so many more applications and data running in AWS than anywhere else that I'm very optimistic about as we get to a bigger scale what's going to happen for AWS on the AI side. And I think we have a set of services that is unique top to bottom in the stack. I think on the last part about what do we expect with respect to acceleration, you know, we don't give guidance by segment, so I'm not going to try and give you guidance, but I do believe that the combination of more enterprises who have resumed their march to modernize their infrastructure and move from on-premises to the cloud, coupled with the fact that AI is going to accelerate in terms of more companies deploying more AI applications into production that start to scale, coupled with the fact that I do think that more capacity is going to come online in the coming months and quarters, make me optimistic about the AWS business.
Thank you. And the next question comes from the line of Ron Josey with Citi. Please proceed with your question.
Great, thanks. Thanks for that, Andy. That was really helpful. Maybe taking that same question, but focusing internally on Amazon. You know, I think you penned an article or a blog post back in June just talking about the ability or potential with Gen AI agents and improving efficiencies and speed to market internally. So would love to hear your thoughts as you think about how Amazon is adopting generative AI internally, how perhaps you've seen improving speed to market as a result of everything you've just talked about. Thank you.
Yeah, I think that AI is the biggest technology transformation of our lifetime, which is saying a lot because, you know, even in some of our relatively short lifetimes, we've been through you know, the cloud, mobile, and the internet itself. But I think it's going to be the biggest transformation technically in our lifetime. And I think it's going to not only change every customer experience that we know and enable customer experiences we really only dreamed about before, but it's also going to change very substantially the way we work. And if you think about it, you know, the way that we do coding, the way that we do analytics, the way that we do research, the way that we do finance, you know, and measure finance. I mean, really, the way we do business process automation, you know, the way we do customer service, every single area that I can think of in the way we work is likely going to be impacted in some meaningful way by AI. And I think when you have a big shift like that, you have two macro choices. You can either decide that you're going to embrace it and you're going to help shape it, and you're going to figure out how to build the right tools to allow you to take advantage of the technology, or you can wish it away and have it shape you. And you know, the posting that you're referencing, Ron, that I made was just really being clear with the team that we're going to pursue that former approach. That we are going to embrace it, and we're going to try and shape it. And so we have. You know, we have a number of tools and agents that we've built already inside the company. And, you know, these are things like if you think about Kiro and the opportunity to have coding agents do a lot of the coding, that's very compelling. It's going to allow our teammates to be able to start from a more advanced starting spot and to be able to invent for customers much more quickly and much more expansively. If you think about services like Connect, which is our AWS service that does call center software, that has a lot of AI built into it that changes the productivity of all your customer service agents. And you can just imagine across the board the types of things we're going to do to make it easier to get software out, to build high quality software, to do operations, QA, to automate a lot of the business process coordination that happens inside the company. We're going to work on a whole bunch of those areas to allow ourselves primarily to be able to invent for customers much more quickly and expansively. But also, I think it's going to make all of our teammates' jobs much more enjoyable because they won't have to do as many of the rote parts of the job that we all do right now, and they're going to be able to own more pieces of what they're trying to solve for customers. And we want deep owners that want to own as much end-to-end as possible.
Thank you. And our final question will come from the line of Justin Post with Bank of America. Please proceed with your question.
Great. Thanks. I'll just ask on the revenue guidance. It looks pretty robust growth in the third quarter. I know you won't say whether AWS is expected to accelerate, but could you talk about some of the drivers and what kind of tariff and other contingencies you've put in there, and then maybe any thoughts on how you're thinking about how the Q4 is shaping up? Thank you.
Yeah, hi, Justin. This is Brian. I'll take this one. Yeah, we've got it to 174 billion to 175 billion, and 179.5 billion, a typo. We feel good about the growth rate in Q2 that we had and the acceleration in a number of areas, including units. And we had a very successful Prime Day earlier this month. So there is uncertainty on where tariffs will settle and maybe the ultimate impact on consumers, as Andy mentioned earlier. But we feel really good about the key inputs we control: price, selection, and convenience. We've talked about delivery speeds increasing. We've talked about selection increasing, high in-stock levels, well-dispersed inventory close to customers. So we think that all works in our favor. So I would say we're cautiously optimistic. I'm not going to give any guidance for Q4 at this time. But
all right, folks. Well, thank you for tuning in for Amazon's Q2 2025 earnings call. The shares are trading down nearly 7% after hours. Not a great look. A lot of that reaction intensified during the call. So if we pull back the time here and we get to, let's just say, a little bit earlier, around 5 o'clock when the call started, you can see that there has been a lot of selling pressure in this stock that intensified during the call. Of course, the earnings release was part of it. We'll scroll back a little more for that. But you can see as soon as this call started, there was a pretty nice decline, a little bit of consolidation, a deeper decline on higher volume, a pop, and then a drop to another low. Now let's pull this back even further to when the announcement came out. And you can see it's just after the bell. You had that drop, a little bit of a pop, and then you saw a buy-in ahead of the conference call. I guess traders looking forward to potentially management salving concerns, and instead you got the opposite. So when we're mapping out this market reaction, what we're really seeing is a drop, a bit of consolidation from that drop, and then a much more visceral continuation to the downside. And 215 seems to be a level worth watching in the overnight session. There's about 30,000 shares on the bid there. But I can tell you right now, if we see this reaction continue into tomorrow, it's going to help to pull markets down a bit. Apple is up after hours around 3%, but it's going to be tough to move against Amazon being down 7%. And some of the concerns about operating income compression moving into quarter three. So again, thanks everyone for tuning in. Appreciate it. This has been Markets and Mayhem from Traderade.com. I will catch you next time.